when we go through these portfolio constructions. So Scott, thanks for that surprise, and thanks for putting me on the spot. Really appreciate it. I feel victimized. I'm going to go to my union. This was not in my contract. But are you all sorted?
Yeah. Well, firstly, thanks for jumping in. But I was like, everything was working, and then at like 9 o'clock, whoops, internet went off. So gotta love it, basically. So anyway, thanks for jumping in. And I think we've got an awesome session today. It's all around partners and risk. As Warren Buffett always says, the number one rule in investing is don't lose money. And number two is refer to rule number one. So, today is all about that. It's about how to manage risk, how to find the right partners. And I know, Alex, just you jumping in to help is a good example of partnership. you got to work as a team. So anyway, let's rock and roll, and let's get straight into it in terms of day 4. I hope that everyone is ready and is pumped, because this is a very important day in terms of the process. So I'm just going to get my slideshow going. We've got a video to start with, and this is a great video. And this video actually was made originally in 2015. So when one talks about having a vision and a dream, sometimes these things take a long time to put into place. And this is a video that we made in 2015 about how we believed we could help people solve the wealth gap, and specifically around yourself and investing and the different parts of the ecosystem that we believed were a necessity to help you win. So enjoy the video.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community. A community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, The Wealth Movement. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. You, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. Passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. Wealthuniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. Wealthmovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal? To build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors, and friends, to be inspired by the world's wealthiest individuals and to learn to think how they do. We are pioneering a global wealth revolution. Join us. Let's change the world.
So what do you think? Pretty cool video, huh? And if you kind of want to get the essence of what we do, why we do it, why Alex is here, why Shane is here, why I'm here, why the rest of the team is here. Just by the way, how many of you are on holiday? Just type in the chat box if you're on holiday or not. I just went to gym this morning. Everyone's on holiday. I know I'm in South Africa at the moment, but you know, so many people this week, they're kind of going back to work next week and they're kind of taking it slow this week. And as usual, the Wealth Migrate team, there's nothing, we don't understand the word slow. So we're fully back into it. But I agree with you, Alex. I love that video. And you know what I love most about that video is, and hopefully this can help people even in their personal lives, where you know you set yourself a goal. I love that saying that Tony Robbins says, where people overestimate what they can achieve in a year, but they underestimate what they can achieve in a decade. Now, we launched that video in October 2015. I drew some pictures and a marketing company took all the ideas out of our heads and turned it into a video. And it was, you know, not even 4 or 5 minutes long. And it encapsulated the vision of what we wanted to build. And I'm super excited today to tell you that every single thing you saw there is built. Everything. And that's pretty cool. If you told me it was going to take 10 years, I would have told you you were dreaming and I would have gone and done something else. I think I would have rather been a ballet dancer. I never, ever expected it to take 10 years. But it took 10 years and we're there now. 2025, can you believe it? Now, why is this important for you? Well, the only way that this has happened is by partnership. And I think it's a great way today to kind of evolve into what we are talking about, because today is all about risk management. And how do you mitigate risk? And a lot of people come to me and they say, Scott, I want to invest in property. And I go, well, I think you're getting it wrong, because you're not investing in property, you're investing in people. Even if you buy a house, you're still investing in people. And so ironically, and I know you're going to think I'm going mad here, but like this is more of a psychology course on human dynamics than it is on buying property. Now, just tell me in the chat box quickly if this makes sense or not, because no matter what you're investing in people. And it's critically important that you understand that, because what today's all about is managing risk. And in my opinion, the number one way you manage risk is through your partners. Remember I said to you, there's only two things. If you literally walk away from 5 days and you only remember 2 things, it's that you've got to have the right information and you've got to have the right partners. That's it. That's all you need. So if you take, and I don't know if you've realized this, but if you take Monday, Tuesday, Wednesday, what have we done for 3 days? We focused on where to get the right information. I've endeavored, sometimes too much information. I'm often blamed for sharing too much and confusing people and overwhelming them. But for 3 days, we've tried to tell you where to get the right information. Today, we're going to teach you how to get the right partners. And tomorrow, we're going to teach you how to bring it all together and walk away with a plan. Is that fair? So, what is today all about? Well, it's understanding management risk. It's understanding investment risk. It's understanding how diversification can reduce this risk. And it's exploring different techniques. But in simple terms, it's all around partnership. I remind you of just a couple of the tricks of the trade. Pay full attention, take notes, try to teach others, play full on, do the exercises, commit to action, goals, take action, have fun, etc. Same stuff over and over again. By the way, if you printed that out and stuck that on your wall, and that was your motto for every single day, you'd probably have a much more successful 2025 in terms of the overall process. I remind you of your resource guide. And again, if you go to your resource guide here, you know, the incredible Shane has once again got all of your resources. So you've got day 1, day 2, day 3, day 4. Again, if you go to any of the days, you've got the recordings here with all the different action steps, etc. My partner Shane is amazing, and yeah, I don't know how else we could make it easier for you in terms of you know, all the different resources. In terms of the WhatsApp group, it's there. If you haven't joined it, I don't know what else to say. In terms of the community group, this is pretty cool. I mean, this is an ongoing community, so you know, it's free. I would strongly recommend that you come and join us, join the community, join the conversation. There's 1,200 of us online. And, you know, the bottom line is you can go in, you can go see what other people had to say, you can see the recordings, you can see kind of their key takeaways and everything in between. So pretty awesome, you know, learning and growing as a community. And it doesn't have to stop on Friday either. It remains free, and it's our way. You've just watched the video. One of the things we want to do is help solve the wealth gap. We believe the only way to do that is by empowering people. And we truly have tried to democratize access. And at the Wealth University level, it's literally free. So therefore, no one has any excuse, none, zero, in terms of participation. In terms of the homework competition, you know, there's always a prize winner for the homework. And I know, Alex, you want to go and check it out. So if you could let us know who you believe should be the homework winner for the community for last night. And just by the way, this is a bigger prize. So we have a big prize today, and we have an even bigger prize tomorrow. And so the winner for today, and while Alex is going to go and assess who deserves to win this, whoever wins it today is going to get an annual subscription to the Wealth Hackers. So yes, and if you think that's cool, wait for the prize for tomorrow. So tomorrow's prize is even bigger, better, and yeah. So I look forward to that. And again, Alex, if you can make a note that you need to start looking for who deserves to win the grand prize tomorrow. And by the way, you have to be here to win the prize. So you got to be in it to win it in terms of that process. So the first 3 days, you win VIP. Today, you win an annual subscription to Wealth Hackers. And tomorrow, let's just say it'll have something to do with the mastermind. But I'm going to leave you with intrigue. If you do want to join the VIP, you still can. And I think, you know, you can get the benefits, you can get the recordings, etc., etc. And also, if you join the VIP, the nice thing is you can join now. And if you want to come back for the next one, you can do that as well. So there's no downside to it. So Alex is going to let us know the prizes, and he'll come back to me and let me know once he's ready. Because it's a grand prize, we want to do it properly. So we always wait until 9 o'clock to see, because some people are like me. What I mean by that is they do it lastminute.com at kind of 8:30 and whatever. So we just want to make sure that it's fair for everyone. And Richard, if you're already a wealth hacker, then we will make sure that we add more value to you. So you don't have to worry about that. We'll always find a way to add value. I believe a lot, and I don't want to get sidetracked here, and I don't want to go as long as I did yesterday. Sorry, I really enjoy myself when I do these things. So I like to just add as much value as possible. But my son, you know, I was brought up in an environment where my mom told me that money doesn't grow on trees. And I don't believe that. I teach my son he can have anything he wants if he adds enough value to other people. So the whole idea, you know, for us is just consistently, how can we add more value? How can we add more value? How can we add more value in terms of that process? Okay, and then there will be prizes I already told you for tomorrow. So make sure you're engaging in the chat and signing up. And Alex will be scouting the scene, not only for today's prize winner, but also for tomorrow's prize winner. And again, I do repeat, you have to be here to be able to participate. And Richard said Wealth Hackers is a brilliant resource. I really appreciate you saying that, Richard. And I have to say, sometimes I sit there, my coach, a lady called Cherie, and I already mentioned this in the VIP room, said that I should be called Robin Hood because I give everything away for free. And she said that, the Wealth Hackers should be at least $997. So if people are sitting on the fence and are not sure, the price is what the price is now. But I've got a coaching session with Cherie on Tuesday, and she's pushing very hard for us to increase that value dramatically, or not so much the value, because the value is already there. It's over $60,000 worth of value, but to increase the price to $997. And, it's interesting because I kind of fight against it because I want to make it as affordable as possible so that, more people can take advantage. And then I'm blown away. Like when, there's a couple of hundred people online and they've got access to all of these resources for $60,000 and they can get it for $37. And that kind of doesn't make any sense to me when people don't participate. So yeah, it's something that I'm working with her on because this year we really want to help action takers get results. And she's going to be coaching me through that. Anyway, let's not go down that road. But yeah, if you're sitting on the fence, just be careful because we put up the price as and whenever we believe the value is there. And but if you have it, as an example, Richard has already got in, and whatever rate he got in at, it sticks at that rate forever. It's called grandfathering. So that's the advantage of participating. So I'm not going to go through the VIP. We've been through that. We continue to get incredible feedback from everyone, which I really appreciate. So you might notice that I keep going over this over and over and over, repetition, repetition, repetition. Well, the focus of why you're here is globally diversified passive income and portfolio growth. The how you do it is you diversify across countries, currencies, assets, partners, and time, and it's all about global passive income. And then the what you do is that in any big task you break it down. So you've got a long-term goal. So like you saw our business goal. Like we created that video, we shared it with the team, we shared it with our shareholders, we shared it with our community, said that's where we're going. And then we broke it down into midterm, like monthly, and then finally you break it down into tasks and activities. That's how you achieve any major objective in your life. The action steps for last night, and I know they were confusing and complicated, and the honest truth is, because you really got two choices. I'm telling you what to do. You can go out and do it all yourself, or you can partner with a family office. Like it's really your choice. But if you don't partner with a family office, research and identify at least 3 different investment strategies: passive investing, active investing, and value investing. So there are 3 different types of investment strategies and methodologies. Create a hypothetical diversified investment portfolio with different asset classes and allocating percentages to various asset classes. Now, if you're not sure, you can literally go back. I gave you it yesterday, the one from Knight Frank, and literally copy it if you want to. Or maybe you don't like crypto as an example, and you want to take crypto out, whatever. But if you don't know, you've got 2 choices. You can either copy, you can do it all yourself if you want. You've got 3 choices. You can do it all yourself. You can copy someone else, or you can partner with us in the mastermind. So if you join the mastermind, you get access to the family office, and they will literally do it for you in a bespoke way. And then lastly, you get to share your key takeaway in terms of that process. And then in terms of the gold, it's research the different asset classes and their historical performance. Just by the way, sneak preview. I don't think I've got it open now. No, I don't. I'll show you something here quickly. I'm not going to share this with everyone because it's too valuable, but I want to share with you what I shared with the VIPs yesterday. So I'm literally just going to put it on the screen for 2 seconds. So there you got all the different asset classes. So if you look here, you got the different asset classes, you got the sub-asset classes, you got what is their income, what is their timing, how long is the capital locked for, and then what is their total IRR return. You've got literally every asset class that exists. So that's a cheat sheet that we built. I shared that with the VIP members, and for the Wealth Hackers, it's not something I'm going to give away for free. It was actually built by one of our community members within the Wealth Hackers. They did about 70-80% of the work, and then I did the remaining. Me and ChatGPT did the rest, but it was a lot of work, so I'm not giving that away for free. Cool. If you want to go to the next steps navigator, you can literally go in and it'll help you using our AI tool as to kind of what your next steps are. I know that Alex has had some great meetings with people in terms of helping them in terms of what the next kind of steps are in terms of that process. Okay, so before we go any further, Alex has let me know who the winner is. This is that moment. So wait, I'm going to have a little bit of fun. Sorry, I like to have fun if you haven't picked that up. So this is that moment we determine. So the winner for the engagement and the homework is Max. So Max, congratulations. Max Dietstein. I hope I'm pronouncing your surname right. Congratulations. You've just won an annual subscription to the Wealth Hackers. And I don't actually know who all the Wealth Hackers are, but if you're already a Wealth Hacker, we will make sure that we make an extra plan for you. But I just wanted to congratulate you. Thank you for your engagement. Thank you for your participation. You've been asking great questions in the VIP room. So congratulations to you. And for those of you that haven't won, make sure you participate and engage. And even Max can participate and engage. And the other VIP winners can participate and engage for tomorrow. Because remember, I always talk on an airplane. So on this airplane, our airplane's flying from wherever you want to London, as an example. And at economy, we've got the passive income challenge. And at business class, we've got the Wealth Hackers. And at first class, we've got the mastermind. So we've given away prizes now at business class, and tomorrow we're giving away first class prizes. So well done, Max. It's hopefully an awesome treat to you. And it's literally all the best resources that I've been doing this now for over 20 years. It's about to be my 21st year. And it's all the best resources that we can give our Wealth Hackers. You've got access to everything, which is hopefully pretty cool. Okay, so let's go. I think for everyone today, and I want to reinforce what we started yesterday, is that you got two options. You can kind of use the three excuses that the majority of people have, which is that I don't have the money, I don't have the knowledge, and I don't have the time. And again, I don't care if you've got $10 million in the bank. There's still people that say, I don't have the money, I don't have the knowledge, I don't have the time. And so you got two choices. You can have that, or you can have the option, and my little funny picture of someone that's just overwhelmed and frustrated and stressed because they get to the end of another year and not achieve their objectives. Or you can be the other side of the fence, which is where you get what you want, you get the knowledge, and you get the time that you want, and you've got peace of mind and freedom, etc. And what I think is really, really important is that I shared with you my own personal stories, 3 different stories of how I got what I want, how I invested $50,000. And actually, I didn't have $50,000, but I found a way to get $50,000, and how that paid off so exponentially, basically, for me personally. How I didn't have the knowledge, but how I went and got the knowledge. And then lastly, with the mastermind with Roger Hamilton, when I didn't have the time, but I joined the mastermind, and then it gave me the very thing I wanted, which was time in terms of that process. So yeah, I think everyone kind of gets those choices. I remind you of the Passive Income Challenge. It literally starts next Wednesday. So if you want to do a live session, obviously there are digital recordings if people want them. But if you want to do a live session with Alex, he's an amazing guy, and he'll literally guide you 4 weeks, boom, boom, boom. Step 1, step 2, step 3, step 4, and within 30 days, you get a passive income. And if you think it's too good to be true, well, come and try. Literally, firstly, the barrier to entry is $10. So even if it's a complete lie and a complete scam, then you're going to lose $10, which it's not, by the way, which is why we give money back guarantees for everything we do, because we know it works. The next thing that I wanted to share with you, and it's interesting because we just, awarded Max with this, but we've been a community company since the beginning. So this is actually me. This picture here is me on my very first day in London in 2004. I was presenting to 120 people on how to buy property in South Africa and England. This was on the Thames in Putney. That's actually Chas Everett. That's Ian Fife, the financial editor of the Financial Mail, the property editor of the Financial Mail. That's Andy McPherson, the managing partner of Smith Tomato Buchanan Boys, the biggest conveyancers in the country. That's Baldwin, the biggest listed property developer in South Africa. We did big launches with them. That's Dr. Hannes Dreyer. I got him to come present in London. You know, the different events we did launching in London. And this was launching England. This was launching Australia. You know, then we did all the buyers trips around America, you know, multiple different groups over to America. And then we started doing wealth weekends. We'd actually go away for the weekend with high net worth, kind of like-minded people. And we had the most incredible experiences around the world. And then COVID happened and a whole bunch of other things, and we stopped doing it for a while. And we actually started doing it again last year. So, you know, I shared these pictures yesterday, but this was us in March with an incredible group in Franschhoek in Cape Town. And then this was up in the Cradle of Humankind in August, and an even better one actually in August. It was amazing. And what I think is really important is I wanted to share a little video with you. And this video, or not so much a video, more of an explanation, is around why we build Wealth Hackers. Because for us, Wealth Hackers is just taking everything we've done, everything that's worked for us in 20 years around community. And with the Wealth Hackers, it's creating a digital global community where people can participate and they can work together. And we really copied the model of Netflix, because our logic was, rather than go and sell this course for $500 and this course for $2,000 and this course for $20,000 and this course, let's just do Netflix, where people can participate, they can engage, they can be part of a community. And then when new courses come out, there's consistently new courses being added. So we basically created the Netflix. And, you know, I shared this with you yesterday, but you get access to Wealth Going Global, which a couple of hundred people have paid $497 for. You get access to Asset Class Mastery. So by the way, sorry, this is all the right information. This is all the right partners. And you get access to that. It's over $15,000 worth of value. And a couple of hundred people have paid just short of $2,000. And just those two things alone are worth $2,500. It would take you 6.5 years paying the monthly subscription to actually pay that amount of money. So, you know, if you say, well, I'm not going to do it in the next month, well, you've got 6.5 years. I say it with a smile on my face. And then what we've done is we've just kept adding. So those were the first 2 courses. Then we added Clem Santa. Then we added the 6 pillars to wealth. Then Enneagram and wealth. Then how to teach your children about money. Then generational wealth, effective tax structuring and estate duties. You know, the entire wealth weekend. So the 6 mega trends, Enneagram wealth and generational wealth, and then exclusive access to the community. And if you literally put the value to what people have paid, it's over $60,000 for all these different courses. And what I have built every business by is Zig Ziglar's principle. You can have anything you want in life if you help enough other people get what they want. Now, I'm not Mother Teresa. I just want to be very clear. And Alex is definitely not Mother Teresa either. So our philosophy is, if I can help 1 million, or maybe even better, 1 billion people get passive income, do you think I will get some passive income? Like, just be honest. Like, if you think about it logically, it's literally all about the Zig Ziglar principle. So our logic is, we could charge $10,000 for Wealth Hackers, but then we won't help that as many people. And so our philosophy is, the more people we help, the more impact we're going to have on the planet, the more purpose we're going to have on the planet. And then with time, the profit will come. So in my opinion, you go purpose first, you do value first, and then profit comes later. So that's just for the people who are sitting in the back of the room going, oh, it's too good to be true. Why are they charging such a ridiculous price? And that's why we do it. You know, so it's $37 a month. You get grandfathered in at $37. And if you remain a wealth hacker for the next 10 years, and one day people are paying $500 a month, you'll still be paying $37 a month, which is the value that you get within the community. And so you not only get all the courses I've already shown you, but whenever we create new courses, there's already 2 new courses in there that aren't even in this PowerPoint. You get the ongoing live Q&A. So every Friday, and by the way, I was doing this free last year, so anyone could turn up. From this Friday going forward, you'll only be able to turn up and ask me questions if you're a wealth hacker and or a mastermind member. So it'll only be for our paid members. You've got access to the events, the VIP access. So if you're a wealth hacker, you can come to the VIP sessions like this week as an example, or with Clem Santa or whatever. You got the community-based learning. I mean, I know this is, I had a meeting with Kelly just yesterday about this, and this is something that we want to up up the whole thing. But you basically, if I go to, sorry, just let me go to, that's the free one. If I go to Wealth Hackers, you can basically go in here, you got the community. And I was talking with Kelly yesterday where, she's wanting to bring in a whole bunch of extra value. We want to bring in the wealth games and a whole bunch of extra ideas. I know Kelly's online now. So we got some exciting ideas for the Wealth Hackers. And as, someone's just joined, so welcome to you. But the point being is that as we add more and more value, we'll just keep putting the value up in terms of that price. So this is everything, it's the place that you can participate. So if it is of interest, diversificationchallenge.com/wealth hackers. We do use this link because we give special value to people that attend the challenge. Like, we know the challenge is free, but nothing's free in life. You're giving your time, and you're giving a lot of time. You and I and the team are all investing a lot of time in this to really try and add as much value as possible. And we recognize that, and we want to give back to you in terms of that process. So, and just for those who like a discount, you've got a 20% discount if you pay for it annually. So you can pay for it monthly, $37, or you can pay for it annually. Again, you'll grandfather yourself in if you pay for it annually, but you'll get a 20% discount in terms of that process. Maybe, Alex, if you can do me a favor and just chuck the link up again. And, again, if you're skeptical and on the fence, go read what hundreds of other people have written about their experiences of doing the courses. Like, this is people who've actually done the courses, everything from CAs to highly sophisticated business people to, we've had CFAs, we've had engineers, we've had doctors, we've had teachers, we've had plumbers, we've had farmers, you name it. It's an amazing eclectic group of people, and the feedback that they've given. Cool. So, and then the last thing that I just want to share with you, which I spoke a bit about yesterday at the end of the session, was our mastermind, which is our Private Wealth Global. This is all about getting results safely and simply, and it's an enhanced partnership between Calio and Wealth Migrate. So again, we've got economy class, we've got business class, and we've got first class. And, economy class is the passive income challenge, business class is the Wealth Hackers, and then first class is the mastermind. And what we've basically done, and Alex and myself and Shane did a lot of work on this, where we looked at our family office and we said, they're helping the wealthiest people, literally the top 1% of the top 1%. They're helping the wealthiest people. What are they doing? And we basically came up with, there's 3 phases and 9 steps. And we literally take people in a systematic way through these 9 steps to help you create generational wealth. So again, my strong recommendation, even our family office, when we shared this with our family office, they were like, wow, like, we cannot believe that you've mapped out our process. And my strong recommendation is you screenshot the screen, because if you don't want to work with us, no problem. But make sure that whoever you are working with is offering it, because from our experience, your financial planner is literally offering you 1 out of the 9 steps. They're offering you investment solutions. That's it. That's all they're offering. They're offering 1 out of 9 steps. And then we wonder why we're not getting results. So the people that are part of the mastermind, we take them through the 9 steps. You get access to the exclusive learning community platform. Again, I just show you here. You can see, so we've got all 3 different platforms. And Private Wealth Global is our one for our mastermind members. And literally, we logically take you through the 9 steps. So you've got the 9 steps, and we literally take you through the 9 steps. You've got access to all the different learnings. You've got the community, the recordings, and everything else. So this is our exclusive business class. Our first class environment. You also get access to our Private Wealth Global, which is our private banking platform, where you get a discount on the fees and the private banking service, et cetera, et cetera, et cetera. And lastly, some people ask me, they say, hey, but I still want the Wealth Hackers. If you're at first class, which is the mastermind, you get access to everything we've got. So you get the Wealth Hackers, you get the immigration agents, you get access to the wealth weekends, you get access to the buyers trips, et cetera, et cetera, et cetera. And if it's something of interest to you, literally just go into diversificationmastermind.com, find a time. Alex, a note that I did speak to Shanika, but I forgot to speak to you, was someone was saying yesterday in the VIP room there were no slots available. So maybe if you could just make some slots available, I'd appreciate that. And then between Alex and myself, we sit down, we meet with people, we understand. It takes about 30 minutes. It doesn't cost anything, by the way. So I know someone in the VIP room asked me that. So there's no cost. And what we're doing in 30 minutes is we're just sitting down with you, we're saying, right, what are you wanting to achieve? Can we help you? And what do we do? And if there's a synergy and alignment, then we invite people to be part of the mastermind in terms of that process. And our whole philosophy is we're here to help you get results. If we don't think we can help you, we will not invite you to the mastermind. We'll point you in the right direction to something else. It's not in like we have a results guarantee. Like we work with you, and as long as you're doing what we agree you're going to do, we work with you until you get a result. Now, to my knowledge, that's unheard of in this industry, and therefore we don't take people on board that we don't think we can help. So if we say we can help you, we know we can help you. And I know, Alex, we're quite close to 100 now, but we've done it for just somewhere in the region of about 95 families already. So we've got track record. We know what we need to do and how it works. But let's pivot into today. And today is, for me, again, I'm not sharing advice. Neither are any of our partners going to share financial advice. But what I am going to do is I'm going to teach you today's the day that I'm going to share my mistakes more than ever. And I promise you, considering I've done this for 29 years and I've invested and facilitated over $1.3 billion, there's been a lot of mistakes that we've made. And I want to share with you the lessons from those mistakes so you can avoid them. Like, is that fair? So I remind you, this here is the formula where you want to diversify across countries, currencies, assets, partners, and time. And it's all about the passive income and portfolio growth. And again, I do remind you that even today, it's just the tip of the iceberg. If you want to go into more detail, there's an entire module of partners within Wealth Going Global. So again, as part of Wealth Hackers, you get access to the course Wealth Going Global, and there's an entire module just on partners. But I want to give you the high level today in terms of what you need to know. So this is all about partners, and it's the power of partnership, investing globally with confidence. Our mission is to help investors be confident in their ability to choose the right partners. Shona, this, I don't know if you hear, but I'm dedicating this to you because I know you and I had this conversation prior to Christmas around how do you find the right partners. So this is all about partners and due diligence. And there's some cheat sheets that we're going to give you in the resources, which will just explain the different types of partners. They'll also explain to you how the due diligence works, how our due diligence works, so that you've got some cheat sheets that you can literally go away and read, not just today, but in the future. Now, what I'm about to share with you is what I call the 4 golden rules. And my strong recommendation is that you screenshot this, because this page, this one page, cost me over $20 million to learn. Yes, you heard me right. I've done the maths, and the mistakes that we've made have cost somewhere in the region of about $20 million. And $20 million is a lot of money. It's certainly a lot of money to me. I don't know about you. So, and these are the mistakes that we've made, and then we've learned what we need to do to make sure we don't make them again. So the first one is that you always want to deal with a partner that has been in business for more than 10 years. And the reason being is that market cycles go in kind of 7 to 10 year cycles. Now, anyone can make money when the market's going up. Anyone. But what you're looking for is a partner and their integrity and how they behave when the market's not working. Because I guarantee you, when you invest, things on some projects will go wrong. And so what you're looking for is partners that have integrity, that have been through crashes, they've been through COVID, or they've been through the global financial crisis. And you're looking for resourcefulness. You're looking for people that still find solutions. And so if you find someone that's only been around for 3 years, and they might tell you they've been incredibly good for 3 years, the problem is that in certain periods, anyone can make money. And I heard 2 beautiful sayings, and I don't know if you've ever heard them before, but I heard them both off this billionaire. And he said, even a turkey can fly in a hurricane. Okay? I don't know if you've ever heard that before, but even a turkey can fly in a hurricane, which basically means that when the market's rising, anyone can make money. And the second one I love is that when the tide goes out, you find out who's sort of there with their pants down. And that's why when the market corrects, the sort of the average to dodgy businesses fall over. And so the 10-year track record, extremely important. The second one is specific market knowledge. So something that worries me a lot is when I meet someone and I go, what do you specialize in? And they go, oh no, I do shopping centers, and I've got an aged care down the road, and I've got a new residential development over here, and I'm running a crypto bot factory in the back, and et cetera, et cetera, et cetera. That kind of jack of all trades. We don't like to work with people like that. I want to work with a partner that is specialized in their area, and they've done it for 10, 20, 30 years. And they're a specialist. Like they do data centers, or they do retail shopping centers, or they do London residential like Gary. I mean, he's been doing it since 1988. All he knows is London residential at an institutional level. That's all he knows. Okay. But I would far rather deal with one-trick ponies that have specialized in their area, because they're the ones that are going to win every day of the week. They've got the experience, they've got the knowledge, they've got the resourcefulness, they've got the market understanding, they've got the relationships. They will crush anyone. And that's why I always say, you can go to America or London or Europe, whatever, with $100 million and you will not win. I guarantee you will not win, because the locals on the ground that have the track record and the experience already have the relationships. You won't even get access to the deals that they know about. The third one, and probably the most important one, is that they put their own money into the deal and on the same terms. So this is an interesting story. I won't go into too many stories today. Actually, I'm going to tell a lot of stories today. So there was a deal we did in Texas somewhere. I can't even remember where. It was a $5 million deal. We put $5 million in, and the partner put his own money in. So we were like, cool, it ticks our boxes, because we've had these rules for a long time. Only to find out that when the project didn't go well and they started to pay distributions, there were preferred shares, and then there were us with ordinary shares. And so we asked the question, did you put your own money in? And he did. But we didn't ask the second question, is, are they on the same terms as our money? So it's very important that not only do they put their own money in the deal, but it's on the same terms. And my logic is, any boat that's sailing out at sea eventually is going to hit a storm. Just like investing, you're going to hit a storm. And you want the captain of the ship tied to the same mast that you're tied to the ship. Like, are you with me? If they've got their money in the deal, trust me, they're going to hold on as tight as you are to sail through the storm. Please give me something in the chat box to let me know that I'm not talking to myself and whether this is making sense to you. Because trust me, this one page that I'm sharing with you is probably the most valuable stuff that I'm sharing with you the whole week. I've said to you, how do you get the right information? How do you get the right partners? This page is the most important page when it comes to partners. The fourth one is a new one that I only added in the last couple of years. And that's that sort of 80% plus of the equity is coming from local investors. So the biggest mistakes we've made are where we did developments or opportunities in America or England or Europe or Australia, and us international investors brought all the money. So there was a partner on the ground and they were doing the deal, but we brought all the money from international. And then and I'm going to go into this in a lot more detail just now too, because this is a really important lesson. But when the shit hit the fan, and I'm sorry if you get offended by my swearing, but there's no other way to describe it. When the shit hits the fan, the locals just run away. And then us international investors are stuck with a massive problem. So the way to solve that problem is to get local investors involved. And if the locals want to invest, then you want to invest alongside them. And so the reason I learned this, the first time I learned this, was we tried to buy a shopping center in Brisbane in about 2009, 2010. I don't remember exactly what year it was. And it was a great shopping center. And on paper, it sounded really good. Like the previous owner had bought it for $40 million and they owed $28 million to Investec Bank. So Investec, a lot of people have heard of Investec Bank. They owed $28 million to Investec Bank, and we could buy it for like $18 million. Now, just in simple numbers that I've just told you, like that sounds like a really good deal. Like you're buying it for below what is owed to the bank, and where it was previously bought for 40 million, you're buying it for 18 million. So like we took it really seriously. Like we flew over to Australia maybe at least 3 times. We did due diligence. We went and looked at all the tenants. We did a huge amount of due diligence. And we ended up not doing the deal. And I can't even remember why we didn't do the deal, but we didn't do the deal. And what I found fascinating was about a year later, I met a very, very, very wealthy Australian. Funny enough, he's a Scotsman, but he lives in Australia. And I mean, to put into the level of wealth this guy has, every Rugby World Cup, he fires his 40 best mates with their wives and families to watch the Rugby World Cup, and he pays for the whole thing, no questions asked. And that's not even his clients, that's just his mates. So anyway, he's a pretty wealthy guy. And he told me that he had seen that building a year before we had seen the building. And what it made me realize was that, and I'm sorry, ladies, what I'm about to say you're not going to like, but unfortunately it's the truth. In property, there's an old boys club. It exists. Whether you like it or not, it exists. And if you're not part of the club, you don't get access to the best deals. So the best deals come up and it gets shopped around the old boys club. And if someone likes it, they buy it. And no one even knows about it. Like, it never gets out on the public markets, nothing. If the old boys club doesn't buy the building, then it goes to the broker network. So it goes to CBRE and JBL and the other broker networks. And they try and sell it to high net worth Australians. I'm just using that example. So they go out across Australia and they try to sell it to high net worth Australians. And if no one buys it in Australia, then they get on an airplane and they fly to South Africa and they fly to Dubai and they fly to Hong Kong and they fly to Singapore and they try and sell it to international investors. And that's when I realized that that shopping center, as good as it sounded up front, had been shopped to the old boys club. No one bought it. It had been shopped to Australian investors. No one bought it. And only then did it arrive on the shores of South Africa. And we thought we were so clever buying it. And when I realized that, with that investment, I decided there and then, never again am I going to try and buy something long distance on my own. I'm only going to buy from I'd much rather partner with, I'm sorry to say this, but the old boy that's part of the old boys club that's buying the good asset, and I partner right alongside them. So I'd like to see in the chat here quickly, what do you think? And by the way, I would screenshot this page, because I call these the 4 golden rules. I could go on for 2 days about how to find partners. In fact, if you talk about specializing, I think what I've specialized in, having done international property for 28 years now, is that what I'm good at is finding partners. That's what I'm good at. So, because I've done it for a long time. So I know what works, I know what doesn't work. I mean, it's literally what I've done for 28 years. And so I could do an entire challenge or masterclass or workshop or whatever you want to call it, literally just on partners. But these 4 things on one page, I believe, are the most important components. And unfortunately, most of them I've learned through mistakes. So this page cost me $20 million to teach you. So if you look at the investment process, and again, if you go to Wealth Going Global, we go into this in a lot more detail. So today is not about going into detail. But at a high level, this is the due diligence process we go through. And what most people don't realize is that they think they go look at a property and they do a due diligence on a property. That's not what we do. We go find partners. So we find partners we like, and then working with the partners, once we've done the due diligence on the partners, so you can see we go and find partners. By the way, we don't find anyone on LinkedIn or Yellow Pages, or everything for us comes from referrals, because when you trust someone, there's a trust loop, and you know what I mean? So nowadays we have everything coming through relationships. Then we make a decision on that partner. So they're called sponsors in the sophisticated world. You make a decision on that partner, then they bring deals. Only then do you make decisions on the deal. It then goes live on the platform. We raise equity on the platform. We close the deal. We then sort of take it through the structure. You then get your quarterly distributions. We track the deal. We exit the deal. Your capital gain is unlocked. We return the capital to you, and your funds are available for reinvestment. So that's our due diligence process. Again, within Wealth Going Global, I take you into this in a huge amount of detail. We've spent millions of dollars putting this together. And so myth number 8 is you can kind of do it all yourself, or you can just copy or partner, like in terms of it. And at some level, I wrote this book, Property Going Global. I spoke about this, I think, on Tuesday, so I'm not going to repeat myself, but where it got endorsed by Clem Sunter. And this was the beginning of our sophisticated due diligence system. This then evolved into our GID system, which is our 10-layer macro analysis system. And within Wealth Going Global, I actually share with you the 2 systems. So we've got GIDS 1.0, so it's our global investment due diligence system for residential. And then we've got GIDS 2.0, which is for commercial. And again, if you go to the Wealth Hackers, and you go to Wealth Going Global, and you go down to partners, you'll see that our models are actually here. So here are our different cheat sheets, and then here are the different white papers, and then here are all our models. So it's our GIDS 1.0, our GIDS 2.0, and you've got our full due diligence checklist. So it's like 142 page checklist in terms of the process. So yeah, hopefully, if people want the substance, it's all there. Today, I'm not going to go into all that detail. Okay, something that's very important. Now, we didn't come up with this ourselves. This is, again, an industry standard, is that when you're looking at sponsors, and remember, a sponsor is just a fancy name for a partner, they designate them with different names, okay? So they're basically a different quality. So if they're tenured, you can see that they've got 50 years plus management experience. They've got a company that's been operating for more than 15 years, and they've got more than $1 billion under management. If they're established, then it's 40, 7 to 15, 500. If they're developed, it's 30, 3 to 6, 200, and emerging is kind of 20 years management experience. So the management experience, they've still got a lot of experience, but maybe they've started a company that's only been running for a couple of years, and they've got less than 200 million. So can you see, hopefully this makes sense. By the way, this is all in the cheat sheet that we're going to give you. But this isn't our way of doing it. This is the industry way of doing it. So to give you an example of this, because I like to use real people as an example. So Feldman Equities is someone we work with, and they've got over $100 million invested just from their own family. They manage over 4 million square feet. They've been working for over 100 years. So their experience is over 100 years. They've been through 7 recessions, and they've got $3 billion under management. This is a classic example of someone that is tenured. And, I showed the people in the VIP room, but we invested in this deal in December 2020. So everyone was like, oh, you shouldn't do office. You can't do office. Well, we did office. And I never for the life of me thought that I would invest in a building like this. I mean, for all my aspirations of property and however much I love property, I never thought that I would own a building that looked like this. And the best part is that look at the return. Because it was COVID, we got a 9.63% cash on cash return and a total return of about 16.7%. And you can see here that the deal was office, the sponsor was tenured, and the risk was core plus. Now, do you want to see something cool? Who wants to see something cool? This is where I get super excited. Who wants to see something cool? Okay, so for those of you who love buying houses, I'm going to burst your bubble here, which I apologize for. So you can go out and you can go buy your houses. It's very nice. You can go and buy them, and you deal with broken toilets and tenants and management and all of the challenges. So I have to just log in live. It's proper financial systems here. And, you're dealing with hassle and tenants and it's just ongoing management and maintenance and structures, and it's a flipping nightmare. Anyway, this is my office building. I use the word my because obviously a lot of Wealth Migrate investors invested, but I also invested. I invest in pretty much every deal we have. In fact, I don't remember one that I haven't invested in. And but I mean, look at this. It's so boring. I don't know how to explain to you. It really is boring. And yes, Alex, it's a trophy asset. I mean, just to remind everyone, look how cool this looks. Like if you're driving past in Florida, in Tampa, and you turn to your husband or your wife and you say, hey, that's my building. Pretty cool building to own. I'm not going to lie. But what's even more sexy is the results. So every single quarter, this building is paying us $6,300 every quarter. 6,300, 6,300, 6,300, 6,300. We got a bonus last year. I don't really know why, but anyway, we did. And you can just see it just paid every single quarter. It's paid us like since we owned it. And unfortunately, for those people that love the hassle and those mom and pop investors that love that hassle, I'm sorry. This is going to be too boring for you. You put your money in, and you get paid every quarter, and you don't have any hassle. And I'm being facetious on purpose, but I'm just giving you an example of what it's like dealing with a tenured partner. Another partner is MAG. This is an industrial property partner that we've done a number of deals with. They've got $300 million assets under management, 43 properties. They've got an average return of 18.8% and an average cash on cash of 9%. And again, we did this building with them. I must admit, again, I never thought I would own big industrial logistics parks like this. Again, 8.38%, a total return of about 12.16, so not as much capital growth. You can see it's industrial. They were tenured, and it was core plus. And again, just to kind of give you a little bit of an input into this one, which one are they now? Yeah, here's Mag. So again, we've got 2 different industrial buildings with them, and each month, so they pay monthly every month. So you can see there's December, there's November, there's October, and on average, they're paying us a total of about $4,000 a month. And that just, again, it's so boring. It's just every month, just sort of trickles in every month. Anyway, we're starting to get when we talk passive income, like we're actually talking passive income. Is this starting? Please just tell me if this is starting to make sense. Like, sorry, I get super excited by this stuff because, like, I'm trying to show you that there's a whole nother world out there that people didn't even know about. This was the other building that we did in Texas with them, another industrial logistics park. I must admit, whenever I drive to the airport and you see these massive buildings and all these trucks outside, and I've always dreamed of like, wow, how could I own something like that? Well, I now do, which is pretty awesome. Then we got what's called a structured note. And this, believe it or not, was a return of 15%. So this is in dollars, 15%. It had no capital growth, so it's purely an income return. And it's with BNP Paribas, that's one of the biggest banks in the world. Cashbox, which is our structured note partner. And again, you've got a structured note, it's tenured, core plus, etc. In terms of the process. So I'm just giving you an example. And then to give you an example of an emerging partner, we've done quite a few deals with DWG. And again, they're an awesome group. I think we've done 3 different deals with them, all industrial logistics. And even though the company's only been going for about 3 years, their partners, the people that put the company together, have been doing it for more than 20 years. And so again, we're getting an average of about 8% cash on cash. This was a 3-year deal, total return of 17%. So I think you start to kind of get the picture. And the myth that I always say to people is you could have $100 million. Like we did this deal, and the one that's actually here on the page. And what was interesting is that it was a building in America, but it was owned by a company in Canada, and they were selling it at a massive discount. They were selling it at I don't want to get into cap rates and try to explain it to everyone, but in simple terms, it was a $10 million deal. And there was $1 million worth of value, like literally on the table. The day we bought it, there was $1 million worth of value. And the only reason that we got this deal was that Judd is part of all these relationships and networks and with the bank. And he managed to do the deal before anyone even knew about it. And that's why I always joke with people that if you had $100 million, like the myth is that you would go do the deal on your own. You wouldn't even know about this deal. And so what's a far better idea, in my opinion, is rather than compete with Judd, just partner with him. It's so much easier. So, if you want to do it on your own, you can do it all. This is the stuff you need to do. Country due diligence, sponsor due diligence, lawyers, brokers, deal, tax, deal structuring, family office, investor onboarding, client support, banks, management agents, etc., etc., etc. I think you get the point. Or if you use our platform, 4 simple steps. Sign up for free, set up your account, browse and invest, and earn an income. That's it. 4 steps. That's why the passive income challenge is 4 weeks. 4 steps. And if you want to kind of look at how it works for the sort of more left-brain people that want to kind of see how it works, is that this is you got your investor bank account, and then each investor has their own personal wallet. So this might be Jill Soap, this might be Joe Soap, this might be Pete, and this might be Sophia. Each one of them has their own investor wallets. They then go on the platform. So in our case, it's Wealth Migrate, the investment platform. Then you got an investment opportunity. I don't know, for now, let's say it's an industrial building in Phoenix. Then once the deal closes, we aggregate all the investors. So whether you put in $10 or $2 million, it doesn't matter. We aggregate all the investors so that we have one investment amount. We then set up a tax-efficient structure. So you don't have to worry about tax and structuring and whatever. It's all taken care of in a tax-efficient structure to be able to invest. We then own the deal. So we invest directly in the deal. There's no middleman. There's no third-party ownership. You invest directly and you own the deal. When the deal pays its distributions, it goes into a deal wallet. And then from the deal wallet, it's distributed into each investor's personal wallet. And then from that, you can either reinvest or you can put the money back in your personal bank account. And that's it, ladies and gentlemen. That's the whole picture on one page. Maury said, I like that kind of boring. I agree with you, Maury. And look, today's a day where I get quite direct, and Selwyn later is going to get a bit direct, because I really want you to kind of realize how important this actually is, that there's a whole nother way of doing it compared to kind of what I'm going to call the mom and pop investing. And on the other side of the fence, now let's talk about some mistakes, because I think it's really important that you learn from my mistakes. So there's two ways of investing. You've got old school and you've got new age. The old school way is all about control. The new age way is all about diversification and partnership. So if you take a building, I don't care if this is a house, an industrial building, an office building, a medical building, it doesn't matter. It's an investment. Generally, you're going to borrow about 60% from the bank. You're going to get about 30% in private equity, and you're going to get about 10% in equity. Now, what happens is that in the red way, the old way, the control way, the investors want to put in 95% of the capital. They want to take up the majority of the equity so that they've got all the control. Now, on the new age way, it's the same metrics. The bank's at 60, the private equity is at 30, the equity is at 10. But the new age investors, they only want to put in 10% of the cash. So they might not have the control, and they've only got 10% of the equity. Now, some people are going, oh, my word, they don't have control. Well, let's look at risk. The old school way has much more risk, and the new age way has a lot less risk. The old school way has concentration. If they've got $5 million, they've got all $5 million tied up in one building. They've got control. Great. It's very old school. Must have control. But the problem is when something goes wrong, you have to fix it. Now, on the other side of the fence, the new age way, you've got diversification. If you've got $5 million and you put $500,000 into 10 different deals, you've got diversification. You might not have control. In fact, it's generally called a majority owner, which is around 25%. So if you've got less than 25%, you're not a majority owner. You've got less control. But this is where it gets interesting. Because if something goes wrong, the local investors will fix it. They've got their money tied in. If something goes wrong, they want to fix it just as much as anyone else. On the left-hand side, the old school way, it's all about being active. On the right-hand side, it's all about being an armchair investor. On the left-hand side, it's all about scarcity. And on the right-hand side, it's all about abundance. Now, I'll be honest with you, this is an investment framework that we use. And if you like the old school way of red and control, then we're not the right partners for you. Let me say that again. If you like the old school way of trying to do it all yourself and control and that whole kind of mindset, then we're not the right partners for you. We don't want to work together because we're not aligned. We work on new age, on diversification, on partnership. And for us, we believe this is the only way to invest going forward. Now, I've had this debate multiple times. There's gentlemen in South Africa, particularly in Pretoria, that like very much, it's like all about control, and you must verf aan jou goed na aan jou skade. I know I can't speak good Afrikaans, but it must be close to your home and you must look after it. And if you can't control it, you should not do it. And I'm like, great, keep all your eggs in one basket in Pretoria. because that's the only place you can do it, is local investing, is the only place you can have all the control. If you want to go international, it is impossible. Mark my words, I've done this for 28 years. It is impossible to know everything in every market, in every sector, in every asset class, and to succeed on the ground internationally. It is impossible. Even the biggest property funds of the world don't get it right. So why do it? Why not just copy the new age way of diversification and partnership? So let me explain to you some mistakes. And our business split in 2018. We had two co-founders, myself and another person. And the reason we split was this very reason, because I wanted to go diversification and partnership and he wanted to go control. Well, here's the example. In 2016, so we split in 2018, but in 2016, he was running our investment committee and we had 12 accountants, MBAs, lawyers, and a huge amount of super clever people sitting in Pretoria making decisions. So we went and we did this development in Brisbane, and it was about 50 units. It was going to earn us about a 28% return. It was I don't even remember, a 2-year investment. And it all sounded great. You know, you build the development, you sell them, and you make lots of money. So we all participated. I personally put my own money in. Our company put money in. So we've got about $400,000 in this deal. $400,000. Not other people's money, my money. $400,000. But in total, we got about $5 million invested in this deal. And today, what happened was we had the pre-sales, or the developer on the ground had the pre-sales. And then the Chinese government changed the rules about Chinese people moving money out overseas. The Australian government changed the rules about foreigners investing in in Australia. And so all the pre-sales fell over. That meant the construction finance fell over. And we were halfway through building a massive hole. We'd spent $5 million building a big bloody hole. Sorry, 2 seconds. Yeah, it's fine. And sorry, my son's on holiday and I'm just sorting something out. So anyway, so we've got a $5 million hole in the ground. The Australian developers run away. The clever investment committee from Pretoria has run away. And 82 investors, including me, are stuck with a $5 million Australian swimming pool. This is what happens when 82 international people invest in a building in Australia that no Australians are invested in. And I've worked now, it's been 8 years. I've worked to try and fix this bloody hole. And just last year, we managed to get a very wealthy Australian property development company family to get involved, because it's the only way to succeed. We cannot build a development from South Africa in Brisbane. It's impossible. If we had invested with local investors here, this problem wouldn't have happened. Here's another example of that same investment committee with the same mistake. So we did medical buildings. Again, I invested my own money in these, my mom, my family, my friends. And over COVID, the guy running these got into trouble. And well, what's happening at the moment, looks like he did fraud. And it doesn't matter, because for us investors, again, we were all international investors. There were no local investors. So even though he's done fraud, there's no real criminal actions. There's no real, and us investors are just exposed long distance trying to solve this problem. And it never, ever would have happened if there were local American investors. And so these are the consequences of this old school mindset. These are the consequences of wanting all the control. And it doesn't work. I'll give you an example of the other side of the fence. So Feldman Equities, we've done 2 different deals with them. The second deal we did with them was this amazingly looking building. We did it in 2021. I mean, look how awesome this building looks. And but we knew it was a value add. It's called a lease up. So it was about 80% leased, and they wanted to get it to kind of 95% leased, and then they were going to refinance, and they had 2 years to do it. And they actually did a really good job. They were ahead of target and everything was on track. But the problem is that in the last year, as you know, interest rates went up massively. And this building got itself into trouble. Now it's a $60 million building, of which $20 million was raised in capital equity. We only put in a couple of $100,000. I think we only had like $300,000 or $400,000 in the deal. but they needed to refinance to look after the project, to stabilize it, and then, so no one's going to lose any money, but it's going to take time to restabilize, etc. They personally, the Feldman Group, personally put in $7 million. And all we had to do was pretty much do what they were doing already. Like, they fixed the problem we didn't have to worry long distance. It was all fixed on the ground. So problems occur, but they fixed the problem. They put $7 million of their own dollars in. Us investors also had to participate. But the bottom line is they fixed the problem. This is what happens when you have local investors versus a bunch of international foreign investors. Another good example, we did a deal in Manhattan in December 2022, and it was a $14 million deal. They were raising $8 million. That means the developer had $6 million of their own dollars in the deal. Of that $8 million, $1.5 million came from our family office, and $500,000 came from us. So $2 million came from international investors. $6 million came from sophisticated investors in America and all family offices. And $6 million came from the local partner on the ground. Now, if you think something goes wrong here, do you think I'm going to be left with a big swimming pool in Manhattan? Or do you think the local investors will make sure it gets fixed? And can you start to see that's the green? That's the new age diversification and partnership. I hope what I've just shared with you in the last 10 minutes has sunk in and made sense. Because, and Alex is saying another trophy asset. Yes, it certainly is. But is this starting to make sense? This is what we should all be taught 101 at university on how to make money and how to protect your money. And for the VIPs, remind me to tell you some more stories around businesses and why this is so important even in business. Okay, let's rock and roll. Managing risk and compliance. So again, we're going to give you 2 cheat sheets on managing risk and compliance and going into it. But just a couple of things that are important from our side. We FCA approved, so we're a juristic rep under the FCA in England. So it's one of the top jurisdictions in the world. It's a defined financial product. We got phase protection. You got European cash custody. So we work with the biggest digital wallet provider out of Europe, which is Lemonway. We got multi-layered compliance. We got transactional wallets, which basically means that every person has their own wallet. And we got data protection. So the tech team that built our platform actually built a platform in America that did $13 trillion a year. So it's got massive data protection, investor database ring fencing, etc., to protect investors in terms of that principle. Then people say to me, how do you protect my money? Why is my money safe? Well, you got external cash custody. So your money is sitting with a third-party provider in Europe that's protected by European compliance and regulation. You got discretionary portfolio manager. So again, it's separate in terms of what we do in terms of the governance. They manage that in terms of the governance. We got designated investor accounts. So each investor has their own account. So it's not like one big lawyer account where one lawyer is trying to manage everything. You got ring-fenced deals. So each deal is ring-fenced. So if there's that horrible deal in Australia, it's not pulling down all the other deals. Whereas if we were running a fund, one deal can impact all the other deals. But because each deal is ring-fenced, there's no risk across deals. You got designated corporate members. You got external custody of investments. So we've got a guy called Michael Carrick in England who actually holds the license in England. And then we still got a bit of overlap between operational investor segregation, investment segregation, but ultimately you want to segregate it out completely in terms of the process. And then I know we go into this in a lot more detail in some of the other courses. And this is about diversification and not necessarily how to use the platform. And I know when you do the passive income challenge, Alex will explain this to you when you use the platform. But then bottom line is you can look at risk. So on the left-hand side, you've got return. So you can see low return, high return. And then you've got risk, low risk, high risk. And you've got core plus, value add, and opportunistic. So core might be a building in central London with a 20-year government lease, etc. Very low risk, but tends to be low return. Core plus is a good asset in a good quality area a little bit more risk, but good quality return. A value add is where there's some sort of clever way to make more money. So as an example, you might be buying a building that's 80% full and you're going to lease it up to 90 or 100%. But there's some execution risk in that you need to take into account. So it's called value add. And then opportunistic is where you're doing a new development. And then there's a lot of execution risk. So although there's high return, there's also high risk in terms of, so it just gives you an example of how it breaks it down. And then the last thing I wanted to share with you, which I think is important, is that, under tax and structuring, people get asked me all the time, what about tax and structuring? It is one of the courses that we actually have within the Wealth Hackers. So if you go to the Wealth Hackers and you go to the classroom, you can actually see here that there's a course on tax and structuring. So this costs about $20,000, this alone. But anyway, it's a course on tax and structuring. And that's why, a lot of people say, but I need to, they don't do anything because of tax and structuring, etc. That course is only 60 minutes long, and it's actually run by our family office partner, Garth Wellman. And I mean, this gentleman has been helping families invest around the world. So he's not stuck in South Africa or stuck in England or stuck in Amsterdam or stuck in America. Anyone you ever go and talk to, they're always stuck in one place, and they're very good at their one place. But he's brilliant at cross-border. And so he's provided that course and that material so that people can actually just understand tax and structuring, because it doesn't have to be as complicated as everyone thinks in terms of that process. We're going to give you as a gift 3 white papers. So the first gift is the 5 laws to building wealth through real estate. So that's in residential, so like literally getting started. So that's for beginners. Then you got the 5 keys to offshore real estate investment success. So that's for people that are intermediate and wanting to go overseas. And then we've got the 4 ways to expand your global real estate portfolio through strategic partnerships. And that is all about sophisticated investors and sophistication. And by the way, Kelly, the conversation we had yesterday, these are the type of white papers that add tremendous value to people, and we should be using within our communities and within social media, et cetera, et cetera. But, ladies and gentlemen, if you take everything I've spoken about for the last 4 days, it comes down to the right information and the right partners. And hopefully I've shared with you this morning what you need to know in terms of the right partners. There's another gift I wanted to give you, which is what we call the Investor Roadmap Workshop. It's a 4-hour workshop where we literally take you through the 9 steps from investment. Now, our passive income challenge, I don't know, Alex, we should maybe take the slide out nowadays, because our passive income challenge, we've even made it, more sophisticated and more, what's the word called? Like, it takes less time basically to be able to do it. But if you do want to go into everything I've spoken about in a bit more detail, we've actually got it under the investorroadmapworkshop.com. You can go and get it. It's on demand. So that's the formula: countries, currencies, assets, partners, and time. Now I want to play a game. Who's willing to play a game with me? And once I'm finished the game, I'm going to actually give you an interview with Selwyn. So Selwyn is the CEO and co-founder of Calio Private Equity. Now they manage hundreds of billions of dollars worth of investments, and he's going to share with you his gifts around how he finds the right partners around the world and how he finds good deals. But before I share that video, who would like to play a bit of a game with me? Okay, so I've got a couple of people. Me, I love games. I'm keen. We'll play. Thank you. Game on. Sure. Yes. Okay. So imagine I come to you and I ask you an extremely direct question. And imagine that I am a doctor and you've been diagnosed with a serious medical condition. And as your doctor, I say to you, listen, you need to lose 10 to 15 kilos as quickly as possible. Now, I hope this doesn't happen. Just remind you, it's a game. But what I'm trying to do is illustrate an important point. So I remind you, you have to lose 10 to 15 kilos no matter what. Your health depends upon it. And the doctor gives you 2 options. The first option is you can buy a home study workout plan. So you can go and you can kind of put it in and you can kind of hope to do it every day. And the second option is you have a coach that turns up and trains you daily. Now, remember, your health depends on it. Possibly your life depends on it. Which one is going to give you more confidence? The home study or the coach? I can see number two, the coach. Option 2 for accountability, the coach. Yeah, I think we're all in agreement. We all know. And we all know that that has a far better chance. So I then ask the question, well, if that's the case for your health, well, what about your wealth? What about building globally diversified passive income? To use that same medical analogy, for some investors, for the super experienced, the sophisticated, the confident, and the motivated beyond belief, we've got just what the doctor ordered. I've taught you for 4 days about getting the right information and the right partners. And we've built the resources. We've got the home study courses. You can go and do Wealth Going Global, which will give you the right information. And you can go and do Asset Mastery, which will give you the right partners. But we've proven for over 2 decades that there can actually be a more effective option. We've looked and we've said, how could we bring coaching into it to help people get results? And the problem with coaching is that generally it's very expensive. And so how can we make it more affordable? How can we allow more people to participate? And the answer for us is simple. We solve everything through technology. So whether you look at Uber and the yellow taxis, or you look at Airbnb and the motels, or you look at Netflix and Blockbuster, every single one of them has used technology to democratize access. And so after 20 years of helping people invest and doing lots of coaching programs ourselves, and me being part of multiple masterminds and listening to all our investors, we believe that the current system is broken. And we wanted to fix it. So first, we built the home study courses. They're built. And then, when you look at the research, and I find this fascinating, according to Harvard, you have a 400% better chance of getting a result with a coach than you do on your own. 400%. That's 4 times. And then I played you this video yesterday, which I want to replay you again. So remember, a coach, you got 4 times better chance of getting a result, according to Harvard.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So take what I just said there with Harvard. Harvard, you've got 4 times better chance. And what this research came out from Chris Williams is you've got 5 times better chance if you're in the right group than you are with a coach. Now, according to my maths, that's 5 times 4 is 20. Are you with me? 4 times, according to Harvard, if you got a coach, and 5 times if you're part of the right mastermind versus having a coach, which means you're 20 times better off if you put the two together than trying to do it on your own. Doesn't that fascinate you? So the question I have for you is, do you want to get out of your comfort zone? Because this is where the magic happens. And I think that this is where I was put on this planet. And I know Alex and I share a similar vision here, is to drag people out of their comfort zone, kicking and screaming, and to help them to the place where magic happens. That's why we created the mastermind. We've been going since October 2022. And the reason we did it, it was interesting because I went to my board and I said, listen, I've been doing masterminds for 10 years. Why are we not doing masterminds? And they said, Scott, we're not a mastermind company. Like, we're not a coaching company. And I agree, we're not. We're an investment company. We're here to help you get results. But if the stats show that you get anywhere between 4 and 20 times better chance of getting a result by using this infrastructure, why would we not do it? And so that's why we did it and we built it. And The focus for our mastermind is globally diversified passive income and portfolio growth. How do we do it? We diversify across countries, currencies, assets, partners, and time. And then what do? We follow the methodology of getting results. And that's what Private Wealth Global is all about. It's this enhanced partnership between our family office and ourselves, and it's about results safely and simply. And again, to repeat myself, but we follow the 9 steps that the wealthiest people follow to generational wealth. We've got the community learning platform. We've got the private investment platform. And if you want to apply, that's the link. Maybe, Alex, if you can just chuck it in. But you literally go to diversificationmastermind.com. And, you know, as Alex and I always joke, whether it's the carrot or the stick you need, we work with you to help you get those results in terms of that process. So I know it feels like a million years ago, but can you remember Jordan? And can you remember the things he wanted? Passive income. He wanted to do it simply and safely. He wanted to diversify across countries, currencies, and assets. He wanted to get effective results. He wanted the right knowledge. He wanted wealth protection, a plan B, and peace of mind. He wanted to be held accountable. He wanted a family office. He wanted generational wealth. He wanted a wealth plan, and he wanted results. Remember I asked you on Monday, do you resonate with Jordan? Are you starting to see how you can get the same results as Jordan? What about Victoria? She wanted a streamlined investment strategy. She wanted to feel empowered to make the right decisions, and she wanted financial freedom. Can you start to see how she did it? Now, I've got a wonderful lady that I want to share with you. And before we go to Selwyn, after Cynthia, we'll go to Selwyn. I want to share this video with you because Cynthia, for me, is a teacher. And she was divorced. She really struggled during COVID. And she joined our mastermind. And she literally said, thank God for the mastermind, the partners it brings us, and the exponential learning curve you've gifted us. And why I like to play this video with Cynthia is that often people say, oh, but I don't have the money, or I don't have the time, or I'm not wealthy like them, or, you know, whatever excuses people use. And I love this video with Cynthia because she's just so real. And I strongly recommend, and even if you've seen this, I'd recommend really listening carefully and closely, because Cynthia epitomizes what is possible. And if Cynthia can do it, you can do it. So Cynthia, thanks so much for joining us. I deeply appreciate you jumping online. I was hoping for you to be there live next week, but you're off to Paris. So sounds like you've got an exciting trip organized.
More rugby. Can never get enough.
Fantastic. So you've got a confusing accent for everybody. You've got an American accent, as I understand, you know, did a huge amount of business in Hong Kong and now live in Italy. Tell us a little bit about yourself, just so the kind of people know who you are.
Yeah, I'm an American. I graduated from college and spent 10 years in New York City in the advertising profession. And during that time, I kept putting on a backpack and leaving and traveling around a part of the world and putting on a backpack and leaving. And the third time I did that, I backpacked around Asia and ended up in Hong Kong permanently, ironically, to watch the Rugby Sevens. And I rolled into town to watch the Rugby Sevens, and I stayed 10 years. And during that time, I worked in marketing in China. So I continued my profession. And relevant to this conversation, I took my first year's salary almost, because I was running around with backpacking money, $100 there, $100 here. I took my first year's salary and just banked it into what I thought was a mutual fund. It was something all the expats were doing. And then I just left it for 25 years. And I worked in Hong Kong, and I met my husband and had 3 kids, and we didn't want to raise them in Asia. And we decided to move to Italy. He was English, I was American. We decided to move to Italy, got to Italy, and, you know, started renovating a big house. That was a big money sink, and went into olive oil picking, olive oil making. So farming, that's a big money sink, as all the farmers in our mastermind know. And yeah, so I ended up here separated from my husband, with not having worked for 15 years, because I'd been a stay-at-home mom and an olive oil farmer. And yeah, that's how I ended up. That's how I ended up finding you all. I think I took Scott I took an online course. It wasn't even an online course. It was one of those Jeff Hayes film productions, like Money Matters or something. And it was just money
Revealed by Jeff Hayes.
Yeah, Money Revealed. And I met you on that, or I listened to your speech on it about how property was the last bastion of the wealthy, and that sort of one thing that the average person doesn't get into. To get into property back then, 20 years ago, you needed to have a lot of money. And you talked about how you wanted to make, you wanted to make people with $100, $1,000, eventually, $10, be able to get into that. And it always stuck. And I didn't see or hear from you again for 5 years. And then I think Wealth Migrate came up on my radar, probably some social media radar, and I jumped on it, and that's how I found you all again.
And what sort of challenges were you facing at the time? Like what problems and challenges? We all, there's a great thing that we move 5 times more away from our problems than we do towards our pleasures. So we tend to take action because of problems, not pleasures. So what were the problems or challenges you were facing?
Yeah, the problem was huge. The problem was I'm living in a foreign country. I can't go back into my old career, which was China media, because I'm living in Italy. I had 3 kids to feed. I'd left my husband. And I was like, where's my skill set? So I was actually at the stage of like, just how do you put food on the table? And I, found a place to live, suddenly had 5 income streams, and all 5 of those income streams dried up during COVID. And it was the first time it hit me that I was working for money, selling my time for my hours for time, and that my money wasn't working for me. And COVID and that incident and that realization happened at the same time that 20-year fund came to maturity, and I suddenly had a chunk of cash. It wasn't a lot of cash by any means, but you got to start with what you start with. And I was in that frozen position of like, what do I do with it? Like, I need this money to work for me because I'm over here scrambling to find a job and to put food on the table for the kids. And I didn't have any debt. I was fortunate. I owned my own home. I owned my car. I didn't have any credit card debt or anything. So in that way I was lucky, but I was really at that paralyzed, what do I do? What do I invest in? I've read enough, read The Motley Fool every week for 30 years. I thought I was relatively financially literate, but I was frozen. I was just like, what do I do with it? Because No, I was just saying it was just at that age, where my kids are 20, they can make fiscal mistakes. And I was at that age where I felt like I don't have another, ride it out 20 years and the stock market always rebounds. I don't have another 20 years to ride it out. Like I had to do that's what my fear was.
A lot of people talk about wealth protection, and that's what I'm hearing. It's one thing to grow your capital, but you also want to protect the capital you've worked, so hard to create over the years. Why did you choose to work with us? What was it that attracted you?
I mean, I had finally found people that were exactly like me, like from multiple parts of the world, maybe dealing in multiple currencies. We have, some gentlemen in the mastermind that might be South Africans. They're living out in New Zealand. They, the typical, the old fashioned 5 flags. You live in one country, you earn money in another, you've got a bank account in a third, you pay taxes in a fourth. And it doesn't really exist anymore. But it was very hard to find like-minded people who understood different parts of the world and who naturally understood diversification. And the mastermind narrowed that down and made it even more specific, diversifying across time and currencies and assets, is even more focused. But just the general idea of diversification. I mean, all my European friends just invest in European things, and all my American friends just invest in US things. And a lot of my Hong Kong Chinese friends are heavily invested in China and the BRICS economies. So I really liked that. And then I liked the overall philosophy that we were trying to make what's available to the 1% available to the average person. And that really resonated with me, because no matter how much you learn, you're always thinking, what's that little bit I don't know? What's that part of the puzzle I don't know because I'm not, a high net worth individual.
So tell me, in terms of, you took a leap of faith. We've all done this, where it's like your sort of intuition's telling you to do something, but there's a cost involved, and you're like, I don't know if this is going to work for me. And what's been your experience? I mean, we've been on a journey now for the best part of nearly 12 months, actually. And what's been your experience, being part of this diversification mastermind?
This diversification mastermind was different from every other sort of course or challenge or, I don't know, group I've ever joined, because it took you from the philosophy of how you're supposed to be investing and actually provided us with answers. So it took us from, it's not just, I didn't need the mindset stuff anymore. I felt like I was already there. And it took us from the mindset right to like, well, here's some ideas that you can invest in. And oh, let's all jump into this together. And if you're not going to invest in what we're providing, here's some other experts in different asset classes who you can go buy a promissory note from, or go buy an EFT from, or go, I don't know, go talk to someone in a private, what do they call it? The family management, family asset. What do they call it? Yeah. So you provided us, you weren't trying to be all things to all people. It was like, I'm Scott, I'm the property guy, this is what I know. And I'm never going to try and sell you a commodity. And I'm never going to try and sell you stocks and bonds, because that's not what we focus on here. But if you want those things, here are those experts that we're bringing into play as well. So I liked it that it was, it was holistic. Everybody sort of knows what they know, and that we draw on the experts in each related field for people to either choose to work with or not. But so you got that learning curve, but you also get that ability to, to execute and make investments with where you want them.
I think what you just said there is so important. It's the execution. At the end of the day, we got to get results. And, there's absolutely no point in getting more knowledge. And, it's that whole saying of people think knowledge is power. That's rubbish. Applied knowledge is power. So, one of the things I love about your story is that, you've gone and met with Callio. So, again, I would have talked quite a lot about Callio already, but, most people don't get access to a family office. A family office is literally for the super wealthy. They manage $600 million, only 60 families, but through an alignment of interests, actually. So they believe in, helping everybody get access to the same information, the same opportunities. And because of that, they agreed to exclusively work with the mastermind. And because of that, you and I have got access to their skill sets. Talk us through your experience with Callio, because it's been an interesting one to get your feedback.
Callio is phenomenal. You have a half an hour free Zoom meeting with them, and with the president in the room, not just someone who's going to execute. And they say, "What's your story? What are your needs? What's your financial situation?" And I pulled up that matured fund that I had and said, I need to invest this, but I don't want to, I can't invest it for the long term. Here are my needs. I have immediate goals. I have 3 children that have just gone off to college. So I suddenly have immediate financial goals that I'm not going to be able to meet if I keep just relying on my income or selling time for money. And they listened. They asked really smart, relevant questions I wouldn't have thought of, but they were particular to me. And I didn't feel like I was being put into a box of, you're this type of investor, or you're this type of investor, or you're this type, And it wasn't just the like, are you high risk? Are you low risk? It was really they really tried to understand my needs. And within 24 hours, they had a proposal to me that said, here's what we're going to do to get you money right now. And then here's what we're going to hold off on and keep discussing and think about and get you into eventually. But here's what we're going to do to solve your immediate problem. And within 1 month, I had income coming in from an investment from them, which just liberated me. I mean, it was just the buffer I needed to not panic about money anymore, and to make the rest of the decisions slowly and, from a different mindset.
It's so interesting what you're talking about there, because the most of us just go along, we meet a financial planner, they put us in a box, we stick our money into something we don't even know what it is, and we don't get paid an income. We get promises of long-term retirement, but we don't get an income. And what you just said there is, within 1 month, you got income back in your pocket. Now, in my belief, income is freedom. So, and I mean, I know for you, you don't need to go into the personal story, but even then, I mean, it had a dramatic change for you in quite a quick space of time to give you that peace of mind,
A huge space of time. I mean, I'm an online English teacher. The year after COVID, the Chinese government banned all English teaching online. And I went from a 7-day-a-week job to nothing, to zero. And it was, and given that it's China and China's unpredictable, there's always those undercurrents and those rumors among online teachers. They're going to do it again. They're going to do it again. But having that financial buffer means to me that if it happens again and China locks out all online teachers, I'm not going to be sitting here with zero income. I mean, it's a safety net that's just unbelievable to me, that someone who is not by any means a high net worth individual can have your money working for you, can have my money working for me, and give me that peace of mind.
Yeah. So tell me, 12 months ago, you could have been like so many other people. And again, thousands, I don't even know, hundreds of thousands of people have watched me present over the last 20 years. Most of them sort of hear it and don't do anything. 12 months ago, you heard it, took action. If you hadn't have taken action, how would the last 12 months have been in your mind? Like, what would have been the difference?
I can definitely tell you I would still be sitting there with that matured mutual fund in the bank account or pension fund doing absolutely nothing, because it matured 2 years before or a year before I met you all. And I was like, right, get this invested. This was, it was the number one goal every month. Get this invested in doing something. And I just didn't know what to do. I had so many ideas and so much information coming from me. And that's where I was 1 year ago. And, within 2 months of starting the mastermind and, 2 weeks of meeting Callio, that money was invested and working for me. And I honestly believe that if I hadn't found you all, I'd still be sitting on it. It would still be doing nothing. It would still be sitting in a bank account waiting to be invested.
Yeah, no, that's brilliant. Or maybe worse, given to a financial planner being eaten away by
to lose more money over 20 years, right?
Yeah, exactly. Yeah. Tell me, why is this different? There's lots of masterminds out there. I mean, there's a plethora of information on the internet. Why has this been different for you from, your other previous experiences?
The fact that our philosophy is we're all going in the same direction is wonderful. But I think certain segments of our life, and when you go into that initial conversation with all of us masterminders, you're breaking down what are our personal life goals, what are our financial goals. Life is more than just finance, but finance is one of those highly emotional, people have a hard time talking about it. It's not polite to talk about money. Maybe we don't discuss it with our best friends, but the mastermind is that one place I can go to where we're all talking about money. It's allowed. It's the purpose of it, and it's that space where we all throw out our mistakes. You've shared with us. I tried this, and this. This is what happened to this property, and this didn't work. We all can throw out our situations, and we're just all in this. We're just all in the same space. We're all in that. Let's talk about money. Let's learn as much as we can, and what are the next steps? What are we going to execute for each other? And it's just such a nice space to be in, because you can go out in life and maybe not even talk to your spouse or your best friends or your brother or your kids or about money. And it's just that space, because it's such an important part of our lives. And it's that space where we all have permission to do that. And we're all going in the same direction.
Yeah, no, I love what you said. And I think, there's so much power in collaboration, and again, just simple metaphor, birds flying in a flock can go 70% further. So unfortunately, I know that, I don't know if you were the same, but certainly myself, I was trying to do it all on my own for 14 years. This was like, I'm getting nowhere doing this strategy.
Right.
Tell me, last thing, if someone's sitting in they're sitting here, they're watching this, and they're sort of saying, it sounds too good to be true. I don't know, like, what should I do with my life? Have you got any advice to them? You've been in that situation. What would be your, advice, recommendation? We don't get financial advice.
I think the problem is that if you've made it this far in either the Wealth Migrate platform or the Wealth University you've done, you're already an intelligent person. And that almost works against us, because we go like, I'm smart. I can do this by, oh my God, EFTs. All I have to do is Google like top 10 EFTs, or, jump onto one of those crowdsourcing platforms. So I can do this by myself. And I think it's almost a hindrance being somewhat financially knowledgeable. I mean, it's almost a block, because you get to that. Yeah. I've taken the course. I've done a challenge. I can figure it out from here. But there really isn't anything like finding the partnerships that we have in this group. I mean, there is no way, for all of my love of reading financial documents and being on financial websites and blogs, there isn't any way I would have ever found the partners to invest with and to invest in without being in this group. There's just no physical way I could have ever, industrial buildings in Texas, or, healthcare centers in Brisbane. How am I going to find those sitting here in the middle of Europe? So yeah, I think the partnership is the number one reason to join the mastermind. It's not just about the knowledge, it's about how do you execute, but you can't execute unless you have the deals in front of you. And you can't have deals in life, in any aspect of life, unless you have good partners. And it's a partnership that I would highly recommend people to, it's worth the entire investment.
Yeah.
Is the partnerships abroad.
Well, thank you so much for your time now. Thank you for sharing. And for me, the thing that I'm most grateful for with the mastermind is the amazing community that we've got. And you're one of the stalwarts that are leading that community with your energy and everything, which I deeply appreciate. And I love, what I love most about your story is that most people assume that everyone's like, uber wealthy and got millions of dollars and highly sophisticated and whatever. And we're not. You and me are not like that, and yet we can get access to the same knowledge and the same partners. And the thing I love most about when you shared with me your story, it was like, well, look, I've listened, I've acted, and look at what it's given me, and in quite a short space of time. And I think I just deeply appreciate you sharing that with people, because hopefully it can inspire others to get the results for themselves.
Yep. I would say jump. I mean, when I think of where I was 1 year ago, it's a million miles away. And not just because I have income coming in, but knowing what my next steps are. Like, I know where I'm going. I know where the next chunk of money is going to go into. I know what, I want to invest in. I know what I don't want to invest in. And I know the partners that I want to do it with. And that's just a huge weight off anybody's, financial shoulders.
Awesome. Well, we look forward to further results from you. Thanks so much.
Good. Thanks, Scott.
So everyone, what do you think? I love that video, and I can see there's a couple of things in the chat there saying that she's relatable and everything. I think that's concise comments. I agree with you. And the reason that I enjoy Cynthia so much is that often people put other people on a pedestal, but she's not on a pedestal, and she's just human like the rest of us, and had divorce and income problems and this and that. And I just love what she says here. Thank God for the mastermind, the partners it brings us, and the exponential learning curve you've gifted us. And I always say to people, like, I like to play that video because everything I've shared with you over the last 4 days, sometimes people are saying that it might not be possible, I might not have access, etc. And I love what she shared and makes it so real for everyone. So I want to pivot now into a video with Selwyn. And just before I do, again, as a reminder for people, is that we call it our aspirational ladder. So you can literally get started with Wealth Going Global as the right information if you want the knowledge. We've got asset class mastery, which is the right partners. So that's getting access. You've got the right information, the right partners. And then you've got the kind of the mastermind, which is the family office. So that's our kind of aspirational level. We created Wealth Hackers as an environment, a digital online community, to help you climb up the pyramid. Does that make sense? So that's what we've done in terms of that process. And then the passive income challenge, and actually, Alex, if you just make a note to remind me, the passive income challenge actually sits here because ultimately that's the path to kind of kickstart you to get going. I don't care if you've got $10 or $100 million. It helps you get results, and our whole logic is to help you get results as quickly as possible. As you know, Cynthia got it in a month as well in terms of that process. Okay, so I've been over this a couple of times, but just in case anyone's forgotten, if you liked what you heard with Cynthia and you want that for yourself and you resonate with her needs, wants, and everything else, then go to the link and Alex and I will sit down with you and see whether we are able to help you. But without further ado, I want to pivot to Selwyn. Sorry, Alex.
Just quickly before you jump into the Selwyn part, I just shared a link on the chat box with a direct link to my WhatsApp. So you can basically just click that and start a conversation with me. Or just if you tried going through the process of applying for the mastermind and couldn't find a time, or something didn't work, just put in the chat mastermind, and what I will do is I'll reach out to you directly after the session or just after our VIP session. I just want to make it very simple and very clear for people to engage with us. So yeah, there's two ways. So you can either start a WhatsApp chat with me by clicking the link, or to just put mastermind. And what I'll do is I'll just reach out to you directly after the session. Or if you already booked the meeting with me, then that's no problem at all. I just wanted to make sure that we have a fail safe on that. Cool. Sorry, Scott, back to you.
Cool. Yeah, Richard was saying he had a challenge yesterday. So that's what Alex is saying. If you just want to type it in there, then he'll be able to help you.
Done.
Okay. So in the VIP room yesterday, we were talking about partners and we were talking about how to find the deals. And Cynthia just spoke about the deals. You might start to see how this whole challenge kind of sort of comes together. Now, what we're going to do, there's two co-CEOs of the private equity team. The one is a CA, got over 20 years of experience in property and investment banking. And the other is a PhD, so a doctorate, CFA. Now, if you don't know, a CFA is even better than a CA. And he got it from Cambridge. So my logic always when it comes to due diligence is, do I want to do the due diligence, or would I like to have a PhD from Cambridge with 20 years experience in property, investment banking, and private equity doing the due diligence? Anyway, that is Selwyn here. And what I want to share with you is a video, because again, I don't think you can ever learn enough from the most sophisticated, wealthy people in the world and those people that are managing other people's money as to what they're doing in terms of finding good deals. And again, this should be giving you two different lessons here. One is that if you want to do it all yourself, fine, then copy what Selwyn's teaching you, and or just partner with us through Wealth Migrate, and you can invest directly alongside Selwyn in his deals. We've done 3 different deals with Selwyn now and consistently bringing new deals to the platform. Selwyn, it's awesome to have you. Thanks so much for joining us. Sorry. It's wonderful to have you online. And just before we get started with you, I wanted to share with people a little glimpse into kind of you guys' background. So firstly, in terms of Callio Private Equity, you know, I just love this, the front of your website, where it's literally communities are more powerful than networks. We're going to talk a lot about this today because, you know, I always say the number one way to manage risk is the right information and the right partners. And how do you do that? Well, it's about getting access to the right networks, basically. You know what I mean? And what you guys do is take it to the next level, which is community. And it's really what we're doing. I mean, on this thing, this diversification challenge is a community of people. At Callio Private Equity, we aim to build and grow community through our investment and advisory activities. We bring it together like-minded individuals and companies that exchange resources and advance ideas, deepening the solidifying relationship of trust. And if I go to team, just to give a little bit of an introduction to Selwyn. So there's 2 partners, Glenn and Selwyn. So Selwyn has over 20 years of experience consulting and banking locally and abroad. He began his career at McKinsey & Co. in Johannesburg, undertaking projects across Africa. He subsequently co-founded and managed RMB's opportunity in real estate in the global real estate portfolio, and later co-founded the RMB Westport Real Estate Development Fund, the largest sub-Saharan and real estate private equity fund at the time. Prior to joining Callio Private Equity, Selwyn led ABSA's commercial property finance business in Africa as a principal for the ABSA Group. He currently serves on the board of trustees of the African Leadership Academy. And if you don't see it here, he has a PhD, which is a doctorate in mathematics from Cambridge University, which is pretty impressive. So without further ado, Selwyn.
You sound a little bit like my mom, but I appreciate that.
Well, you know, someone has to tell people you came from Cambridge. You know, when we're talking about risk and due diligence, I want people to at least kind of have a bit of a sense of who they're talking to, if that makes sense, you know, in terms of it. So, let's get started. And before we go any further, just tell us. I mean, I've read your bio. No one ever likes to brag, so I do it for you. But tell us just a little bit about your journey. I mean, really, you can see you've got a very extensive journey in property, in real estate, in funds, in private equity, etc. Just talk a little bit about it. How did you get into it? And you know, just so people have an idea of who's in the room.
So Scott, I mean, you've read out my bio. I started as an academic and realized that wasn't really an expression of myself. I didn't want to be in research, and I didn't want to be stuck in an institution. And the best way for me to get diverse experience in commerce was through consulting. And when I joined McKinsey in Johannesburg, it was the fastest growing office in the world, McKinsey's fastest growing office in the world. And we had very diverse clients and very diverse projects in operations, strategy, organization, capital planning, and so on. After being there for a few years, McKinsey has gone through phases, as people on this call would know. I joined RMB, and that was actually life-defining for me, joining RMB. My current partner, Glenn Scorgi, was one of the first people that I worked with when I joined RMB. And in your point earlier, I'm actually glad I joined a little early and was able to listen to what you said.
I'll just share here, just so people can see. This is Glenn, who someone's referring to. So
yeah. So Glenn and I started to work together in 2004, I think it was, when we first traveled together. We were looking for opportunities. We had a relatively open mandate. The banking world was very different in those days, much less regulated and constrained than it became after the global financial crisis. And what I loved about the banking world is something that I've retained in private equity, and that I think speaks to your audience, Scott, speaks to the people who are here. And that is the sense that your risk is the risk that you see. Consulting is always 1 degree removed. You're telling people what to do, you're giving advice, and then you walk away. You leave your PowerPoint presentation on the desk, and you get back into your fancy car and drive away, and then go to the next client. With and particularly the RMB culture as it was in those days, you are very well aligned with the bank as your principal investor. And Glenn and I ran a principal investing business, and then later on went into funds and into property and into various other areas inside the bank, but always having that particular philosophy. So I think the journey for me is having found that world where you're very well aligned with the people that you work with the people who supply you with resources, with capital in particular. I always wanted to stay in that. And obviously I moved in banking and developed expertise in property, but I've always liked the idea of being a generalist. And Glenn had developed a relationship with Garth, who you mentioned in your presentation as well, Scott. They were kind of social friends, and and Garth wanted to build the capability in Calio for Calio to do private equity in a I think a different way. Just to dwell on that for a moment, private equity investments are often presented as investments into funds, and the traditional private equity managers, the famous private equity managers that are out there, Apollo, Cerberus, Blackstone, and so on, those managers manage giant funds. Glenn and I had both been investors in funds on behalf of RMB and had managed funds on behalf of RMB, and we didn't feel that fully captured the idea of alignment that we wanted with our investors, the idea of a fund. And what we do in Calio Private Equity is direct private equity. That's our core business, is direct private equity, which is individual transactions or individual investments matched to groups of investors for that investment. So, for example, investors who don't like a particular sector or who want to be more offshore or whatever it is, we can offer them investments that make more sense for their portfolio or for their levels of interest. The other thing that we realized would be very powerful is what you mentioned, Scott, which is the community side. Calio has a family office and a wealth management business. It has clients who, many of whom have been in business or are in business and have networks and links of their own. We don't really like the idea of networking in the sense of, attending cocktail parties and doing that kind of thing.
Just by the way, that's the biggest load of bullshit I've ever heard, where you walk around and hand out your business card.
Yeah, hand out your business card.
It's literally like poor man thinking. Like, it doesn't work. It
doesn't work. It doesn't. So the deepest due diligence that you can do on your partner is just knowing them, or knowing somebody who's been in business with them and seen them operate under different kinds of circumstances, and somebody who can vouch for their integrity. So many of the people that we invest in are people that are part of the broader Calio community or our own personal networks, in the sense of we know people who've worked with them, or we know people who've invested with them. And many of our opportunities come through that kind of channel. And I think that's very
By the
powerful.
way, sorry for butting in. I know people hate me doing it, but I'm just trying to give context to people. Remember to everyone who's listening, remember what I just said literally half an hour ago. What he's talking about is you test people's character not when it's working, it's when it's not working. And that's the power of knowing a relationship, because everyone tells you about all their wins, but they often don't tell you about their losses.
Yes. So, and I mean, for me, the best example is actually my own business, Calio Private Equity. So why is it that after working with Glenn in the early 2000s, mid 2000s, we went our separate ways just because of the way things evolved in R&B and the property businesses and so on. And then we joined together. Glenn and I lived through the global financial crisis together. And we were very, very heavily exposed in our portfolio to that. We managed a portfolio of with assets of over $250 million. But it was exposed to the property sector. So it was the most heavily hit sector during that global financial crisis. But I could see how Glenn worked. I could see how I worked under those circumstances. And you can build a rapport, and you can now build that level of trust, which is so fundamental. And if I look at the investee CEOs that we work with, not all of them have the same level of capability, or to be completely blunt, the same level of integrity or alignment with us. But the point is that we try to find people who will have that alignment. And in situations where they're facing adversity, we'll do the right thing. And at least we'll think through the process with us aligned with them. So to give you an example, and I think Scott in various other presentations, I think Glenn might have presented to a different audience, but Austin Business Finance, which trades as backed in Texas. Glenn and I were visiting that business last week. The CEO, through COVID period, said he would never stop paying interest to our investors. So we actually offered to him and said, we're pretty sure your business needs liquidity in a time like this. So we're happy to approach our investors and say, you're not going to be getting your interest payments. We felt that might be the right thing for the business. And he said, no, he didn't want to do that. He felt the correct thing was to maintain a 100% track record with us and with our investors, even if that meant making a personal sacrifice on his side. And he was able to trade through, and the business has grown and actually grew through the COVID period. Other competitors went out of business, had to be resuscitated or bailed out, but he was able to do this. And I think he took a risk, but the point was that he wanted to ensure both that he was aligned and that he communicated to us that he had that alignment with us. So I think, Scott, your various comments very pertinent. In our deal making, we try not to be the majority. We want to make sure that management and the people who are going to be required to deliver on the investment thesis.
I'm being rude, but I'm just coming back to this, like what I call old school mentality, new school mentality, because old school is, and by the way, Glenn did an incredible presentation last week to our mastermind, was about private equity, and I'll show you some of the slides. Again, people have access to get asset mastery should they want. But the point being is that the old school way of doing it in business or in property was to go and buy the whole thing, okay? And the first time I ever learned about this, ladies and gentlemen, was actually my father. So my father was the financial director of Rainbow Chickens, and he said that Rembrandt, that's one of the most wealthy families in the world, came in and bought 40% of the company. And now the old school mindset is, no, but I must own more than 50%. I must be in control of the company. And then a couple of years later, my friend works in England for a company called Strand, and they're a private equity firm, funny enough, as well. And they got bought out by a big family, and this family, the Hanson family, bought them for 40%. I thought, shit, there's a pattern there. The wealthiest families in the world are buying 40%. Why are they not buying 51%? Because we're all taught to go buy the whole thing and we must control it and whatever. And the point being is that that's an old school way of doing it, because if you control it, you have to manage it. And then, interestingly enough, literally last week, Glenn said, no, we're into conscious capital, and we'd much rather the founders and the owners and the team and, whatever, have the majority, because then they're going to get out of bed every morning and worry about it and getting it done versus you getting out of bed every morning and worrying about it. So I'm jumping in, Solomon, but I'm just trying to give context to my little picture that I drew here, basically where it's going,
Yeah, that's exactly it. And then the other component is often leaving space for other key employees. So yes, the founder, manager, it's often also other people who are needed to be aligned and who need to have the same kind of orientation. So we're very keen, like in our contracting, we're very keen being in on the remuneration committees of the companies that we invest in, both to avoid the conflict that you have with the CEO founders, but also to manage that next level, to say who else is important here? Are they correctly incentivized? Are they locked in? Is there the correct protection for the company and the correct alignment for that employee? So to try to understand how value is being delivered, and knowing that as an investor, you are bringing a particular kind of value. You're bringing risk capital, but you're not bringing operational capabilities. You're not bringing market knowledge or anything like that necessarily directly. You sometimes can help, and I think we do help our investees. And we often intervene when they want us to intervene, and they'll say, can you help us with this? Can you talk to the bank for us? Can you sit on this call? We've got this issue with one of the other shareholders. Can you help us? We're always available to our investees to do those kinds of things, and to investee CEOs and founders. But we are we're fully aware we're not able to do what a CEO does day in and day out. We're not able to do what a management team does day in and day out. And we're deliberately if we could run, one of our investees, we would, rather than our current job. But we actually believe that our founders should be the best at running their own businesses, both because they should be fully aligned, but also they should be developing their knowledge as they go, as they operate, and they should have entered with a particular understanding of their business, which obviously we test. Yeah. So yeah, to go back to your original question about personal journey, I think for somebody like me who feels that they're a generalist, wants to be involved in quite a few things, likes the interactions, which are, I think, meaningful interactions with partners. This is a very good job that I have. That I'm able to speak to CEOs about something that's very fundamental to them. In many cases, I'm able to help them, and our role in their lives is actually quite fundamental. And we do have investees who are very thankful for the way we've approached things. And we've actually had people seek us out saying, I know I can get the money somewhere else. I could probably get a better deal somewhere else, but I'd actually rather have somebody who wants to relate to me when things are not going well, will understand that or help me intervene in a positive sense. So that's the conscious capital side, in terms of not just in terms of the final end goal investment, but also in terms of how we operate those investments and how we make those investments on day one.
Yeah. So let's go. I want to share my screen here quickly, and we're not going to regurgitate everything that Glenn went through. So Glenn did this session for our mastermind, and like I said to you, every month we go deep into one asset class. And Glenn, actually, funny enough, literally this month of October, did the private equity one. So again, you can get this as part of asset mastery. But what I just wanted to talk about a little bit was just the asset class of private equity, because some people confuse it in terms of what is it, etc. And in simple terms, it sometimes gets confused, but private equity is where you invest in a company, but it's a non-listed company, so it's a private company, and it can also be a property deal. Like, we're going to talk through some real opportunities now, so people can get a sense of it. But just from your perspective, Selwyn, how would you sum up private equity?
Yeah, I think you've already summed it up. So it's a massive asset class. Normally when they show private equity or the size of private equity, they're only talking about those things that show up in formal funds. But if you think about it, almost every business, any business that is not listed, is a private equity business, in the sense of operating outside the public listed markets. So it's a very wide range of potential investees. And it's our area in private equity is a little bit above venture capital, but certainly below what we would normally classify as buyouts or mergers and acquisitions. We invest in what we call growth. So it's the supply of capital to businesses that want to grow and for whom the best form of capital is equity capital and long-term permanent capital in some other form, potentially permanent debt even. So that's how I would classify our version of private equity.
Brilliant. And I think, again, I'm not going to go through all these slides, but you know, going through this whole presentation, there was like, what are the different returns? How do you balance risk and return? It was talking about private equity in 2022 and where the opportunities were. It was talking about the Callio private equity team and taking it to extend more around what Selwyn has already spoken about and what differentiates them. But what I wanted to do was actually to pivot. And I want to start talking about some you know, using a deal as an example to kind of talk about kind of risk and partners, because I kind of want to get in. So as an example, this is an opportunity that is literally becoming available as we speak. It's one of the ones that you've done a lot of due diligence on, but let's not use this as an example, as a case study for kind of the type of, you know, thinking that you would go through in terms of risk and due diligence. So let's just say now, I want to be in American property. I personally have been wanting to be in it since 2010. I've been wanting to get into Manhattan for my whole time, and I've never once been able to invest in New York, let alone Manhattan, you know, because it just never found a way to be able to do it, never found a partner on the ground. And so talk us through, Selwyn, the process you and Glenn go through in you know, ascertaining a market, you know, finding the partner, doing the DD on a deal and determining, yep, this one's good for our investors.
So this is actually a fantastic example, Scott. So one of the sponsors of the underlying transaction for this Catherine Street transaction in Manhattan is somebody called Duncan Randall. Duncan and I have known each other. We were for over 20 years. We were together in McKinsey and we served on the same team and landed up living in the same house for several months, serving a particular client. Duncan is married to an American. He's lived in America for several years now, and he's built a property business using his own money and money from other investors. He had previously been a private equity operator in South Africa. He was one of the founders of Tana Africa, which is funded by the Oppenheimer family and a sovereign wealth fund from Singapore. So here is somebody that we know very well. Duncan knows that we have an investor base that is interested in these kinds of assets. He has shown me personally transactions. Before I joined Callio Capital, I invested with him myself. So I have a sense of how he's operated. I know how he's operated through difficult times like the COVID period and how he's been able to manage assets. He actually approached us and said, this is what's going to come available. I want to structure a deal which will allow your investors to invest into this debt. There are other people in his network that he's offering this to, and so we had we had a chance to review his due diligence, look at the documentation ourselves, ask various questions, understand the market studies, and so on. But the starting point was this was not something we sought out. We did not do a web search and say, well, deals available in Manhattan.
And by the way, if you do that, just quickly, sorry, if you do that, like you're buying the crap no one else in America wants. By the time it's on the web, no one else
exactly
wants.
Right. Yeah, so this is very much a private deal based on relationships that we have and that other people would simply not have access to. So I think this is one of those examples. Every single one of the deals that we have was sourced or has been sourced through somebody coming to us and saying, do you want to participate? Does this interest you? Is this something that your investor base is likely to go for? And then we can interrogate it and say yes or no. In this case, what was brought to us was a very much established transaction. A lot of the initial property work had been done to a very high standard. Duncan himself works with a team that has a lot of experience in this particular kind of property redevelopment. Historic buildings in Manhattan that are being redeveloped. There's a system where you get historic credits which allow you to benefit, to effectively do your developments at a cheaper rate because you're getting these tax credits. And So a lot of the work had already been done. It was a question of reviewing that and understanding that and getting a sense of the risk return. We already had a strong sense of the sponsor and the way that they would approach this. So yeah, so this particular transaction, what's been offered is senior debt secured by a long-term lease on a property that was formerly owned by the Catholic Church. It's in the process of being transferred from the Catholic Church to the development company. And the funding is senior funding, as I said. It's secured funding. It's 1% a month payable quarterly. So very good return. We've again, to Scott's principles, we've said we will only take a relatively small portion of it. We're probably going to take somewhere between 15 and 20% of the total debt that's available, so that other people can put their money in. There's a big group of investors, many of whom have invested before with Duncan and with the other sponsors in his team. And so that offers us a sense of comfort. Other people are reviewing the documentation. Other people have experience on this, and there's I think strong alignment with the total investment team.
A couple of things that I think are first you're saying. So firstly, there's power of community. Okay, so like it's not like me trying to do it all on my own. Like, oh my God, I'm going to do all my own due diligence, whatever. It's like there's a whole group of us, you know, like looking at it and whatever, doing it. The second thing is that from a risk perspective, you're effectively taking out the bank. Like you're almost taking the position of the bank because you're putting the first mortgage debt down. So you're behaving like a bank. You're putting the money down. You've got first mortgage debt over the property. So should stuff go wrong, the property's there. It's exactly like when a bank lends you money against your house. And for the bank interest rate, you're getting paid 1% a month, paid quarterly, which basically means you're getting 12% a year in US dollars. Now, please tell me, and again, I've been doing this 28 years, 12% in Manhattan, New York, okay, for a 12-month project, it can be extended to 18 months, but it's still a short-term project, 12 to 18 months. If it gets extended to 18 months, by the way, you still get paid your 1% per month. So you're still getting 12% a year. I mean, that is a really, really good return. Now, you're not getting the capital growth. Remember, you're not playing in this part anymore, but that because you're taking away the risk. So this is an income-reducing deal only, but it's a 12% in Manhattan, New York, and you basically have it secured against the property with a partner that's got extensive experience, So I just want to kind of give people a context of what we talk. And these are real life examples now. Like I didn't want to, someone phoned me yesterday and we had a chat and we were like, you know, we can talk about private equity until the cows come home, or we can talk about actual deals, like, because then it's like literally people can learn from actual deals, you know? So that was the one. Now we're talking diversification. And so I tell you what, one was getting a little time machine and an airplane all at the same time. And we're just going to fly across the world, straight over to another continent, another currency, another partner, another asset class, by the way, because that one is effectively a debt deal. Yes, it's in property, but it's a debt deal in property. And now we're going to fly across the world to Germany, which, by the way, is the #1 economy in Europe. And we're going to look at a euro deal, and it's actually an equity deal in terms of that process. So if I come here, so let's do the same process now with this deal. Because I'm trying to give people a concept of from the comfort of their couch, they can get access to partners, they can get access to information, they can invest, and they don't have to get on an airplane.
Yes, they don't have to get on an airplane, and they don't have to visit small towns in Germany. So just to give some context on Germany and why the opportunity is a genuine diversifier, Scott, because you know, United States, Manhattan, that is the center of the universe, at least according to New Yorkers, that, you know, and a lot of people, that would be the center of the universe. In Germany, a big chunk of the economy is run out of towns that you and I are unlikely to visit or be able to find on the map necessarily without some kind of help. So I mean, the examples are Volkswagen's based in a town called Wolfsburg. This particular town, Wuppertal, is home to a couple of industrial brands like Vorwerk and suppliers into the motor industry. It's not far from Düsseldorf, but it is a secondary town, but with a very strong industrial base. So just to give you a sense, this kind of opportunity is fundamentally different and is a genuine diversifier. And in Calia, this would be the third deal that we've done with the same sponsor. The sponsor, interestingly, was also introduced indirectly to me through people that I knew and several people that I know had invested with him previously, and very successfully. It's managed by somebody called Peter Katz. Peter used to run the Redefine portfolio in Europe, and he then went on his own and uses private money and has a very similar mindset to us, which is quite important. He also raises funding, does a kind of an equity raise for each individual investment, and does it. He wants to do it through people that he trusts and that he knows. So as I said, this is the third one we've done through Callio, but before that, I'd actually been exposed to several of his other transactions. And again, I'm used to his due diligence process. It's very rigorous. It involves technical elements, engineering studies of the buildings, for example, studies of existing leasing documentation, tax structuring, and so on. Those are extremely important in this kind of transaction. What's been offered here, though, and again, to Scott's point, is actually equity. So it is an equity exposure. It does have a reasonable yield. We expect a kind of mid to high single-digit yield initially. It has in-place debt, which is important. It has debt that was entered into and that will be assumed on transfer of the property when interest rates were still low and that were fixed at that time. So there's a massive benefit in that.
But just on that, sorry, Saran. So what's really important here, people always say to me, oh, but Scott, if I buy a house, I'm getting a mortgage, so I'm getting leverage, and et cetera, et cetera. And what you're saying is so important, because you are still getting leverage. The only difference is, even if you got $100 million and you fly to Germany right now, the chances of you getting debt are zero, because you've got no relationships. And if you do get debt, you're going to get very expensive debt compared to partnering with a local person that's got a track record, got experience, has the debt in place, and like you said, has fixed it prior to the interest rates rising. So it sounds too good to be true. And it is if you're trying to do it on your own, unless you've got partners.
Yes. So these deals that these deals that we're talking about, Scott, are a little bit different from the deals that we normally do as a pure private equity house. Anyone who visits our website will see deals that we've done directly. These deals are deals that have been brought to us by people who are part of our community, and people that we've invested in personally, or who are people that have been invested in by like friends of ours and other members of the Callio community. And so these are a little bit different, but these are not possible to do from where we're sitting. And we have to rely on the individual partners and the networks that they've built. So for example, Peter has a whole team of people who do due diligence for him in Germany. He has a legal team that has worked with him on multiple transactions. He has an administrative team that is able to manage the investment structure for him. And those are things that if you and I were trying to build those from scratch or trying to do on our own, we simply would not be able to do without years of work and without having been in the market previously. And the benefit of somebody like Peter is he built up his infrastructure while working for Redefine and building their European portfolio years back. Then going on his own, he decided to focus on particular asset classes. He did a study. He said there's certain kinds of assets that seem to do well through the markets: health assets, diversified assets, basic necessities, properties that deal with basic necessities. And then the German market in particular has certain resilient features to it, including the availability of debt from multiple funders. Again, but Scott's point stands. It's not possible for us to arrive there, drive out to Wuppertal, and to start doing deals. These deals come along quite rarely. This is the first deal we've seen for over a year from Peter. Just hasn't felt that the other deals that he's seen are good enough for his investment, for his investors.
Yeah,
so that's just
to put in perspective, so the last deal you guys did with Peter, and you've done 3, so there's track record, yes. You've already said. But I remember there was a deal as COVID was happening, and one of your investors got spooked, and there was a gap for 700,000 euros. And I was like, pick me, I want to be in it. And we tried to go to our database, and we just couldn't move quick enough, because these things move quickly when it's a good deal. And again, I remember it being a DIY store.
Yes.
Anyway, and the long story short was, it was a great income return. It had good capital growth. and you guys exited that in 18 months or something, and got
Yes.
a 1.8 multiple, which basically means if you put $100 in, you got $180 back, which is like really good in less than 2 years. And it's, again, like it was for me, it was so frustrating. It was like, I was like, I want to be in the deal, but we just couldn't act fast enough, And one of the reasons we created the mastermind was that sometimes through the Wealth Migrate platform, it takes too long to get stuff set up and blah, blah, blah. And sometimes with the mastermind, it's like, guys, it's a good deal. We need to move quickly. Are you in? Are you out? And sometimes that's how private equity works. You've got to be able to act fairly quickly. So when this deal came along and you were like, same operator, same person, I was like, if you don't let us get in this deal, it's gonna be war. You know what I mean? So really, really appreciate it. Peter, let's go to the last one. So again, let's go back in our time machine now, back in our airplane, and we're gonna fly right across the world, back to Austin, Texas. And again, we're going to go into a different asset class now. It's still under the umbrella of private equity, but now you're actually investing in a company. And Peter's, I keep saying Peter now because you put Peter in my head. Someone's already mentioned this company backed. Just tell us a little bit about this, because I mean, these are literally three opportunities that we're looking to go live with you on, in the near future.
Yeah. So Scott, I want to stick with the theme that you raised, this partnership theme. So Backed is the trading name of a company called Austin Business Finance. Austin Business Finance is founded by a South African called Zaan Myburg. Zaan is also founder of Cashflow Capital, which is a business here in South Africa, and is a working capital lender, mostly to restaurants, franchisees, and so on. And he moved to America, and we, as in Calio, started financing him pretty much from the beginning, just feeling that he had a good concept, he was a good operator, and he had a model for dealing with a kind of risk managed model for introducing himself into the US market. So we've been invested since 2019, and we invested in equity and permanent debt. And now that's all been taken up, but the business is a lending business. It does what are called merchant cash advances and lines of credit to medium-sized and small corporates in America. That is a massive market. United States is obviously a very dynamic economy. There are hundreds of thousands, maybe millions of businesses that actually fall into scope for Backed. And it's mostly working capital lending of less than 18 months and relatively high interest rates, because it's generally lightly secured or unsecured lending. And what's important is that over the years, we've been able to monitor the credit performance, and we've been able to monitor the management performance. And Glenn and I were there last week, and we sat with the management team. We were able to see Zaan has built a business which now has 56 employees, 46 based in Austin, 10 based in California. He sources deals through brokers and through a direct team. He's got a refined technology system for reviewing deals, assessing the credit risk, and a very small percentage of deals that are referred ever get funded. But there's massive scope in a business like this. Backed was actually rated by Inc. It was rated as one of the top 1,000 fastest growing businesses in the United States, ranked in the top 200 last year. So it's viewed and seen as a successful high growth business. What's been offered is debt, again, at 10% per annum. It's a very different profile, very diversified. That's US dollar debt. That's money that goes into the business as subordinated debt and then is used to finance the operations of the business, mostly lending, mostly directly going into building the book of Austin Business Finance.
Awesome.
There is a senior lender. And this helps us as well, because it's not just our due diligence. It's Fortress, one of the world's biggest lenders, is the senior lender to Austin Business Finance. And they have a line of $50 million expandable to $100 million.
It's amazing. And you also, you guys put your money where your mouth is. As I understand it, debt and your equity, you've got $20 million in the...
Yes, $20 million we have exposure to it.
So
and I'm personally invested. Well, personally, it's actually my wife who's personally invested in this business. Glenn is personally invested in this business. So it's yeah, we definitely put our money where our mouth is, just generally. But with this opportunity in particular, it's been a very good investment for us. We've been able to see it grow from initiation, and we've built a very strong rapport with the management team. Obviously, like any other business, it has its challenges and it has its risks and so on. But the risk return profile, I think, is massively compelling for a debt instrument. To get 10% per annum and to have an investment term of 3 years. Given where interest rates are likely to go, I think I just think that's very compelling.
Yep, no, completely. Just one thing we forgot to mention here. This building in Germany is, so just to remind everyone, this one is a 12% US dollar income return per year. This one is a 6 to 6.5% euro income return, again paid quarterly, with a total return including capital growth of somewhere between 13 and 15% in terms of that process. And then this is a debt deal at 10% in US dollars. So you've got euros, you've got dollars, you've got debt, you've got equity, just to kind of give you an idea of different types. Selwyn, as always, it's a pleasure to chat. I love what you've done today just with everyone and sharing with everyone. I'd love anyone to give comments in the chat box as to what you thought. What we've done very consciously today is we've taken away a lot of the theory and we've talked practical about actual partners and actual deals, so that people can understand it. Because again, I can waffle about the theory till the cows come home. I've got an entire course on it, Wealth Going Global and Asset Mastery. You can go and do all of the research. But in my opinion, there's nothing more powerful than learning while doing. And what you've helped us do today very consciously is go through 3 deals and hopefully for everyone, literally learn while doing. And even if you're watching the recording and these deals are gone, because they will be gone. They're going in the next, one of them's closing in a month, the other one in a month, in 2 months. The point is, might be watching the recording, but it still gives you a concept of when deals come, how they work, particularly when we work with Kalia.
Scott, thank you so much. I love the opportunity to speak about my business. I love the opportunity to speak about my deals. And I'm also glad that I joined early to see what you said about partnerships, because that's so fundamental to the way we operate as well. Yeah,
no, well, look, it's I fundamentally believe it's the collaboration and partnerships is the currency of the 21st century, and that is built on trust. And the reason I say that is that, let's say that the currency of the 21st century is trust, but how do you achieve trust? Well, it's collaboration and partnerships. It's the only way. It's the only way to do it. If you try to do it all yourself, it's literally the old school way of doing it, and then you're going to be stuck probably in your country, in your asset class, in your town, in your currency, and because it's virtually impossible to go internationally without collaboration and partnerships and to truly diversify. But there's lots of brilliant comments coming through, Selwyn. Thank you so much for your time.
Thanks,
and have an awesome day, dude.
Bye. Thanks, everyone.
So, what did you think? You just got a Cambridge degree right there and then. So I love the comments here. There's some lovely comments that have come through, which I really appreciate from everyone. But yeah, I must admit, like for me, sometimes when I watch these things, because I sit here and I watch and I listen, and I'm sort of amazed at how we've democratized access to the stuff. You know, that German deal, you heard me talk about it. We couldn't access it. Now you can. There's a German deal on our platform. The Manhattan deal that he was referring to, that one's gone, but there's a new one coming up. We're actually looking to launch it next week. So best you get in that passive income challenge, because there's a deal coming next week in Manhattan. That Austin Business Finance, that BACT that he spoke about, is on our platform. That's an ongoing deal. So because it's a debt product, we just closed tranches of it. So yeah. And it just gives you an idea of the caliber of people. I mean, everything we've spoken about today is partnership. And what I loved with the interview with Selwyn is that it reinforces everything that I'm trying to teach you, so that you realize it's not just me off on some sort of bandwagon in terms of that process. If you want to go and meet some of the other partners, again, you can go to Asset Mastery and you can meet all the different partners. But as a bit of a bonus here, we've got in our resources, we've got an interview that I did with Judd Dunning. Judd is an amazing guy that does industrial properties. So we've done 3 industrial properties with him. And then Bruce Saunders He's actually an ex-South African, but he's been living in Atlanta. He's a CA, chartered accountant. He's been living there, I think, since 1997. And we've done over $100 million worth of medical buildings with him. He also does multifamily. He started his own business about 18 months ago. And believe it or not, has 18,000, yes, you heard me correct, 18,000 units under management, and is currently raising $50 million. So we're looking to do a deal with him as well in terms of that process. So as we conclude for today, the definition of insanity is to keep doing the same thing over and over and again and expect different results. So you've been a mom and pop investor, if you've been a retail investor, hopefully you're realizing now what the top 1% are doing and what you could do differently. I warned you right up front about the fact that over the next 5 days, I was going to overwhelm you. And I'm sure with Cherie's coaching, she's going to tell me to dumb everything down and make it simpler and whatever. But, you know, we between Alex and Shane and I, we just try and over deliver and try and add as much value as we possibly can so that you can see the substance behind what we're talking about. And so I just wanted to kind of give you peace of mind. You don't have to feel overwhelmed. Remember the game we played with the doctor and where you had a serious medical condition. If you had to lose 10 to 15 kilos and you were given 2 options, you've got the home study course. And, you know, we built the home study course and we've got the coaching. So whichever route suits you, we've built both to be able to help you. You know, it's 2025 now. I've been on this journey now 21 years. And so whether you want the right information, we've got Wealth Going Global. If you want the right partners, we've got Asset Mastery. And for us, if you want, you know, literally someone to hold your hand, so, you know, you want it done with you, done for you, then we've got the mastermind in terms of that process. And I always ask people, and I sort of say to them, you know, when you talk about the mastermind, I believe you've got 3 choices. So yesterday, I kind of gave you some questions around, you know, the passive income challenge. But today, I want to ask you different questions. You know, would you invest 6K, 12K, or 24K if all it did was help you achieve your freedom goal? Would it be worth it to you? Think about it. Would you invest 6K, 12K, or 24K if all it did was help you achieve your freedom goal? What about if all it did was provide you a way to protect your wealth? You know, you've worked really hard for your money and protect what you actually have. Would it be worth 6, 12, or 24K to you? What about if it saved you a decade of time? Time is one of our most valuable assets. If it saved you a decade of your time, would it be worth 6K, 12K, or 24K to you? And what about if all it did was give you the globally diversified passive income so that you had the peace of mind? Would it be worth 6K, 12K, or 24K to you? And I remind you, I know it feels like a long time ago, but on Monday, Michael Honeysett had this choice to make back in late 2012, early 2013, when he came on a buyer's trip. And as he said, when I joined, it was the best money I ever spent. And it would never have happened if I tried to do it myself. And so the only constraint that we have at a mastermind level is that we can only offer this to 5 people at a time. Because you sit with me one-to-one. Like I sit with you and I get very clear, what are you trying to achieve? Then you sit with our family office and you get very clear on where you are, what you have, what is your current portfolio. Then we help build you a plan to get from A to B. Then we check in with you every month from an accountability perspective to help you get results. And then we have the whole learning, knowledge, community, accountability, and investment going on. And that's unfortunately why it's not scalable. It's not because it's bespoke, it's personalized. And so if you are interested, as Alex said there, book a meeting with him, go along. We do guarantee our results. I know in the financial industry, everyone says, you can't do that. Yes, we can. I'll tell you why. Because as long as you do what you say you're going to do, we will work with you until you get your results. Whether it takes you 3 months or 3 years, it doesn't make any difference. We will stick with you to help you get that result. And that's us putting our money in our mouth. We're putting our money and our time where our mouth is. And again, you can go and read up and see what everyone has to say. And that's really why we put in that coach. I've been asked for many years, would I coach people? I had someone just yesterday ask me, will I coach them privately? No, I don't do coaching. I'm not a coach. We help people invest internationally. I'm a qualified, certified international coach, but I only do it in the mastermind environment. So if people want one-to-one coaching with me, then they need to be part of the mastermind. And I only offer the one-to-one at a certain level in terms of that process. So my belief system too, as you go into 2025, if you want to get out of your comfort zone and you want to go to where the magic is, that's what the mastermind is all about. Let's go to the action steps for today. Identify one specific risk in your current investments and outline how diversification might mitigate it. Name 3 things which you can do to get the right partners and the right information. Consider the wealth hackers, the mastermind, and even the passive income challenge. And then finally, share one key takeaway in the Wealth University community group. So this is really important to share your key takeaway in the group, basically. And Alex, if you could just check, and if we haven't done it, if you could do it, just make sure we've got a link for day 4 so that people can go and share their comments and questions and thoughts for day 4. Then the gold, again, you don't have to do this today, but with time, we'll be going and watch the video with Judd Dunning and then with Bruce Sanders as well. So yeah, I think you're getting an idea of the substance behind us. And, we share this stuff for free because we want you to be able to have access to it, knowing that we want to help you get results. So I want you to have the knowledge, the confidence, the trust, and the transparency. But ultimately, I want you to invest because that's where you're going to get the result. That's the formula. You need to diversify across countries, currencies, assets, partners, and time. And it's all about passive income. If you want to join the Wealth Hackers, I can see a whole bunch of people have joined today. So congratulations to all of you. And if you want a 20% discount, take advantage of the annual fee. Someone else is just, it's amazing how whenever I bring up the slide, people start to think about it. But yeah, this is a unique opportunity for the people that are part of the challenge. And as I say, I'm meeting with Shri on Tuesday, where we're going to look at the whole pricing model. So if you want to take advantage of this price point, I would recommend you do, because I'm meeting on Tuesday, and I know for a fact she wants me to make it $997. And she's working with me and our team to really grow our business. So I will take her input very seriously. This is our model. So we've got Wealth Going Global, which is the right information, Asset Mastery, which is the right partners, the Mastermind, which is where it comes all together with the family office, and then our Wealth Hackers is how we help someone grow through the pyramid, basically. And in conclusion, if you want to go fast, go alone. If you want to go far, go together. I love this African proverb, and I think Selwyn epitomized that as well. If you want to go fast, go alone. But if you want to go far, go together. For those of you in the Q&A, I will now bounce to the Q&A and I'll see you there. If you want to join the WhatsApp group or the Facebook group, you should already have all the links. The next navigator, I know Alex has shared this with you, but again, I want to simplify things for you. It's another important day. It's another long day. And ultimately, for the first 3 days, Monday, Tuesday, and Wednesday, we told you how to get the right information. Today, we've taught you how to get the right partners. And tomorrow, we bring it all together and we walk away with a plan. It's about putting it in practice and ultimately walking away with your wealth plan. So, as with any journey, as with any sports game, it's how you finish that counts. It's not how you start. So make sure that you come tomorrow fully engaged, fully present, and that you finish strong. As Nelson Mandela said, money won't create success. The freedom to make it will. And I will tell you one thing. We've developed, day 5 is slightly different, and we've got some amazing stuff to share with you tomorrow. So thank you for today. I hope you enjoyed it. Thank you for all the amazing comments which have come through. I really, really enjoy them. And to those of you that we're going to see in the VIP room now, fantastic. I've got lots of stories to share with you. And then for the rest of you, we'll see you tomorrow. Thanks for your time. Really appreciate it. And yeah, we're nearly there. Let's finish strong tomorrow. Cheers.